You have a situation in the UK where I'd call it a crisis of confidence.
Fiscal and monetary policy appeared to be moving in completely opposite directions.
The Bank of England is having to try and manage the chaos that the government has been creating in the bond market.
The bond market vigilantes are back.
What we've had in the UK really is symptomatic of what is happening elsewhere.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Here we go again, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro with equity futures, TK, up a little more than 1%.
Yeah, you're going to say same week, same whatever.
I wasn't going to say anything like that, TK.
That wasn't going to work out, particularly on Bloomberg Radio worldwide. What an extraordinary week. And John, we start up with the same surprise that we've had all the news in the United Kingdom, and you can brief us on it. You know it better than me. John, to me, all I need to know is I got restriction on the screen. The Bloomberg Financial Conditions Index is where it's been every moment except the beginning of COVID.
Super volatile last week. Kit Dukes of SocGen on the UK this morning. Lisa, you'll love this line too. Goodbye crisis, hello recession. The vigilantes win. We hear from the Chancellor a little bit later this morning.
So we talked about this last week. Who blinks? It is, of course, the blinking of the fiscal policy makers with a new regime. Jeremy Hunt going to be speaking today. We'll go through all of that. But the key question is, what can he do to really restore credibility for this administration at a time when there still is a huge risk premium baked into both the gilt market as well as the pound?
And dare I say, on a technical basis, Mike Wilson and Morgan Stanley almost on the edge of constructive this morning, guys. Lisa, just almost there.
Technically is sort of the key word. I mean, basically he's saying like, things could look good, and then they're going to look really, really bad. He's basically saying there could be a 16% rally, and then you look at the downside and it's pretty dire.
Until companies fully confess or a recession officially arrives. Bank of America, Tom, later this hour.
Yeah, some of the research notes are really, really interesting. And John, to stagger to November 2nd, what I would say, and this comes off the Washington meetings, is everybody in America is focused on the inflation story, the recession story, and that. The rest of the world's focused on dollar liquidity and the shortage of dollars out there. And you see it deep in the Bloomberg screen. There's a tension on a Monday morning that wasn't there a week ago.
Let's whip through the price action just briefly for you this Monday morning and start with the equity market. We are elevated on the S&P 500. Futures higher by a little more than 1 full percentage point. The volatility yesterday, just absolutely ridiculous, or rather on Friday. The volatility in the football yesterday, quite incredible, Tom. Did you catch City Liverpool?
I saw it, and you know, I can't translate it, but the Liverpool defense was world-class.
Virgil van Dijk finally had a good game.
Yes.
Stepped up. We'll touch on that later. Yeah. Yields come in 6 or 7 basis points on a 10-year. 394.87. We can discuss them later. Euro stronger, euro dollar 97.50, and crude Bramo 85.77, up by a little more than a tenth of 1%. Call it 0.2% higher.
Yeah, thanks so much. So what I'm looking at right now, of course, 8:30 a.m., we get some economic data. But before then, we're looking at Jeremy Hunt and what could potentially happen when he starts speaking in about a half an hour time. And then again to the House of Commons at around 10:30 Eastern. What does he say to give some support? There had been a lot of discussion over the weekend, different talk shows, and he had been pretty encouraging. We are seeing a bit of a dip in yields across all maturities. Is it enough? If you take a look at how we've performed year to date, yields are still incredibly high, and the pound is still incredibly low relative to the dollar, incredibly weak, even though you have seen a bit of a bounce on the heels of this. Then we do get some more earnings. Bank of America earnings out around 6:45 a.m., 8:30 a.m. We get the earnings call. Do they give the same kind of constructive feel that we heard from J.P. Morgan, or do they give more of a sense of the consumer a little bit more strained? I mean, we're not seeing that yet. Right now, Bank of America shares up 2.5% in the pre-market. And 8:30 a.m., we get U.S. October manufacturing data, as well as what we're getting with the Empire manufacturing. How much do we get a sense of a deceleration, a rapid deceleration in inflation and in activity at a time when this really is a tea leaf that is probably the first real data that we get out of October? The City Economic Surprise Index, John, this is interesting to me. It's been trending upward. We've actually seen positive surprises. Is that a good thing or a bad thing for economists that want to see this economy roll over sooner so the Fed doesn't have to do quite as much?
Did you see you, Mitch, on Friday?
Yeah, that was concerning.
There you go. The chairman of the Federal Reserve says to look at it, Tom, so we look at it. University of Michigan one-year consumer inflation expectations, 5.1%.
Unanchored.
On the lift.
On the lift here, and this is these words that float around credibility and the idea of anchored, unanchored. There's 14 flavors. There's 14 different opinions. I'm not going to lean on it other than to say usually I ignore University of Michigan, and I understand right now it's got a value.
Laurie Cavassini joins us now, the head of US equity strategy at RBC Capital Markets. Laurie, it wasn't about 3Q earnings. It was about guidance for 4Q and beyond. What are we learning so far?
So, look, I think if so far in reporting season, John, I've been a little bit disappointed that it sounded a lot like the last couple reporting seasons. So we're hearing things like the tone around labor is improving a little bit, not seeing any major cracks yet in terms of either the consumer or demand. But companies are battening down the hatches and getting ready for choppier times. So at least there's that. But I think that in terms of, if you wanted the earnings Band-Aid ripped off, and that's what a lot of investors have been telling me, so far what I'm hearing is I don't know if we're going to get it this reporting season. I think we may have to wait till, February, March to get that.
Laura, you and Ben Laidler are on the same page. Ben Laidler starts out by saying the first ever so slight glance here at earnings are a less bad start. And then you talk about moving to high quality. Define what high quality is a comfortable place to be.
So high quality is a factor discussion that I have with a lot of investors. If you talk to your average portfolio manager, small cap or large cap, especially in the small cap space, odds are they've done some sort of back test that tells them that things like positive earnings and high ROE outperform over time. So come invest with me because that's the kind of portfolio I run. And so what we're starting to see is that after a summer in which the low quality stats, so negative earners, highly shorted names, negative ROE, low ROE, those names were actually working pretty well coming off the June low on a relative basis. And what we're seeing now is that more of the high quality versions, so the positive earners, the high ROE, the lowly shorted names are starting to work, which frankly, Tom, is a silver lining heading into the end of the year because that actually bodes well for active manager performance.
To me, Laurie, and this goes to the risk-free rate returning here, and maybe it has to do with big combinations like Kroger and Albertson, but all of a sudden the zombies have to report. As what we're really talking about here is not high quality, but that all of a sudden it's zombie November.
I think that's a fair way to look at it, Tom. But, I would also say it depends on your definition of zombie a little bit. I think that in general, when you're going into sort of a lower growth, uncertain time, investors do cling to those higher quality names. And typically those are the ones that do come through, manage through challenging situations a little bit better. So I think that, investors are sort of circling up, closing the ranks, and really just clinging to what's worked over time. And as a lot of PMs say to me, you're not going to get beaten up by sticking to your philosophy. Where you are going to get beaten up is if you underperform when you've deviated from your philosophy.
Laurie, how much could you see the S&P getting to that 3,200 level, which is the base case for Mike Wilson over at Morgan Stanley, even with some of the constructive feel that you have in select names, in select industries?
So I think it's a great question, Lisa, and I understand why that number is important. When I talk to my friends in the technical strategy community, they'll often say 3,500, 3,200 are kind of the next big battlegrounds. And I see that as well from a fundamental perspective. 3,500 is your median recession drawdown, a 27% drawdown from peak. But if the market starts to think that the Fed is not going to be able to pull that off and that we're going to price in something more challenging from an economic perspective, an average drawdown is about 32% in a recession going back to the 30s, and that takes you to that 3,200 mark. And if you go back to the pandemic, Lisa, we lost 34% peak to trough. And so I think that 3,200 mark, if 35 doesn't hold, I think 3,200 is the next natural place to go. But it's hard for me to imagine we go too much lower than that, just because in the face of the pandemic, frankly, when life was on the line and there was just a massive uncertainty ahead of investors, that's only as bad as the market fell. So I think 3,200 is a good place to look if 3,500 doesn't hold, but 3,500 is proving to be a major battleground here for good reason.
Well, Laurie, how hard is it to convince some of your clients to be optimistic, to be constructive, when there is this high likelihood of that psychological level on the index?
I think that what's interesting is I talk to people about it from a positioning perspective. What is the next big thing that you need to do? And I show them my charts basically showing that defensives are at peak valuation relative to both cyclicals and secular growth. And I tell them, I've been traveling around the country pretty nonstop since June. And I tell them, everyone I talk to has plenty of defense. They've cleaned up their portfolios. They own as much staples or utilities as they're ever going to own. The next thing to do is to go on offense. And that really resonates with a lot of people because they know from that experience over the summer, going back to the conversation with Tom about quality, when the low quality stuff started to move, That is not where they were positioned, and that's where they started to see some underperformance in their portfolio. So I think people understand that if you're a longer-term investor, eventually the tide will turn. And frankly, there's just not a lot people need to do anymore on the defensive side. They're already there.
Hey, Laurie, wonderful to catch up with you. Laurie Calvasina there on the latest in this market from RBC. The latest from the UK, just getting this from the Chancellor. The measures announced today will raise 32 billion sterling, the UK to shorten universal energy support to April 2023. So the Chancellor in the UK just shortening the duration of the support they'll offer to offset some of the pain in energy to April 2023, to scrap the plan to cut income tax indefinitely. That from the Chancellor. More difficult decisions are coming on spending. So, Tom, this isn't just a U-turn. This is a massive change in terms of who is running the Treasury and what they're doing.
And Sterling with a pop here, John, right away from a 112.50 to a 113.3. Nice pop. Breaking out to 114 would be a huge deal.
Reminds me of something Duke said this morning, Tom, when he said, goodbye crisis, hello recession. These kind of initiatives are arguably going to get us there quicker.
Because I was away, John, you and I barely talked. Wait, we barely talk anyways. But besides that, this guy ran the Olympics. What does it mean to you that the Chancellor of the Exchequer is the guy that did the very successful
didn't know that.
London Olympics?
Is that your piece of trivia this morning?
No, but it's not trivia. But to me, my God, that's got to be the toughest job going, to run an Olympics. See, he's like Mr. Organization, right?
Do you think he could run a marathon right now? The reason I asked that, Tom, is because
you're looking at me.
I wonder how long he'll be in the job.
Oh, you think that's funny, do you?
I do. I think that's funny.
Or how long this Prime Minister will be in the job. So for this Prime Minister right now, Tom, just seems to me, and Lisa, please weigh in, that this is the phrase we used on Friday, that you have a Prime Minister in office but not in power. And these headlines this morning kind of confirm that.
Yeah, a lot of people comparing her tenure to the shelf life of lettuce. That's one of the analogies.
You know, they're doing a race. I think one newspaper in the UK is doing a race. They've got a picture of her framed and a lettuce.
A trust countdown
to see what lasts longer. Steve Chevron in the next hour, 7 a.m. Eastern Time. Looking forward to that. Futures up on the S&P by more than 1%. From New York City, Guy Johnson out of London coming up shortly. This is Bloomberg.
Up to date with news from around the world with the First Word News. I'm Leanne Gerrans. Ukraine's government says Russia has launched kamikaze drones this morning. The explosions hit the center of Kyiv, damaging several residential homes. It is the second strike on the capital in a week. In Luxembourg, European Union foreign ministers are due to agree on the launch of a new mission to train around 15,000 Ukrainian personnel in the EU and sign off on an additional $487 million in weapons financing. Now, EU nations have agreed to a new package of sanctions on Iran over human rights violations relating to the death of a young Iranian woman who died in police custody after allegedly flouting strict Islamic dress codes. Austria's foreign minister says the package targets 11 Iranian people and 4 entities responsible for serious human rights violations. Last month, deadly protests erupted in Iran in response to the woman's death. Mercedes is broadening its battery-powered lineup with a new sports utility vehicle. The aim is to take on Tesla's Model Y, the car maker's latest step to go all-electric by the end of the decade. The EQE SUV is the 4th model to use Mercedes' dedicated EV platform. Now, we did speak to the CEO, who says the energy crisis may hasten the move in renewables.
Europe in particular will be challenged in the next 2, maybe 3 years. And we're working on fixing that, especially Germany, that's been dependent on gas coming from Russia. So there's a lot of activity to deal with this short to mid-term challenge. But if we go and look a little bit longer, mid to long term, I think this may even be a catalyst to go quicker into renewables.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
We will not hesitate to raise interest rates to meet the inflation target. And as things stand today, my best guess is that inflationary pressures will require a stronger response than we perhaps thought in August.
Governor Bailey teeing up the next decision from the Bank of England in early November, live from New York City this morning. Good morning. Here's the price action for you on the S&P 500, elevated and kicking higher on the S&P, bouncing back again this morning by 1.29%. Yields heading south lower, negative 9 basis points on a 10-year, 393, and sterling a 113 handle again. Cable, the pound against the US dollar, 113.04, positive by a little more than 1%. And I wouldn't just call this a U-turn. This goes beyond that, Tom Keene, from the new Chancellor, Mr. Hunt, over in London, making plans to reverse pretty much everything and shorten the energy support programme from 2 years down to just through April 2023.
The Bloomberg Financial Conditions Index for the United Kingdom, John, is absolutely original. It shows the bizarreness of the moment, and I think we've just got to dive into it. I'm going to do it on the political end with Guy Johnson joining us now in London, because John's a lot more up to speed on this than I am. Guy, can you explain the politics here? Is the Chancellor of the Exchequer running for office?
Yes.
That's not a radio answer, Guy. We got to do better than that. It doesn't work on Bloomberg Radio. He's running for office.
Yeah, they're all running for office. It is open season. Everybody is now running for office in the UK. Penny Mordaunt's running for office, Rishi Sunak's running for office, Jeremy Hunt is running for office. It is open season on Liz Truss. The real problem here, Tom, and I'm joking with you because it is amazing to watch and I can't quite believe my eyes, but I find myself in a situation where I actually struggle to wonder whether or not they can make it stick, though. Because here's the problem. Can you change leaders again without a general election? Can you credibly do that? And I think that is going to be a question that increasingly becomes relevant as the days progress. We have a relatively positive outcome from the markets this morning. That will buy Liz Truss, Jeremy Hunt until the 31st. If things calm down beyond then, maybe this kind of atmosphere calms down and actually there is a view taken that she can survive a little bit longer than that. We've got around 2.5 years until the next general election. The Tory MPs are not going to want to bring that forward. If the chaos continues, yes, she's definitely gone. And that certainly looks like the base case at the moment. But I wouldn't rule out her remaining either. I think Liz Truss is running for Prime Minister as well at the moment.
Guy, let's get to November 3rd and this Bank of England. Go through the policies that have just been announced and walk us through what this is going to mean for Governor Bailey when he sits down with the team in a few weeks' time.
OK, let's look at pricing this morning, John. So the front end's come down, let's call it circa 50 basis points. So we're back. I've been talking to Ben Ram about this morning from MLive. We're basically back down to, let's call it circa 100 bips for the next meeting. So that's kind of where we were pre-mini budget. So we've priced out quite a lot, and the front end basically has moved down in yield quite aggressively, but probably doesn't go any further. The market is still pricing a terminal rate of 5 to 5.5%, 6%. So we've still got a long way to go on the front end. So this looks like a sort of tactical rally here this morning. But the base case is still that the Bank of England has to do a lot. It probably just isn't pricing the very aggressive move that it potentially would have had to announce were this chaos to have had to continue and we hadn't had basically a large reversal on the unfunded budget, John. So that is kind of where we are. I'm just looking at the Bloomberg now. Less than 175 bips of BOE hikes now priced by year end versus 280 only a few days ago. So that's the kind of the move we're seeing. But whether it goes any further, particularly at the front end, looks doubtful at this kind of this kind of level at this stage, John.
Guy, given the fact that you're talking about everyone under the sun running for office and that this is open season, there's a question about the credibility of Jeremy Hunt at this point as he basically undoes everything that Liz Truss put out there as her platform. How much credibility is there in the markets and by other policymakers that this will stick, that this is truly going to be the policy going forward?
I think this probably will stick, Lisa. And the reason for it sticking is the market reaction. They're terrified of the markets down in Westminster once again. Westminster is terrified of the city. That is now what is happening. So you get a positive reaction, probably is a tick in the box for this policy. He's maybe gone a little bit further than some had anticipated in certain areas, and he is indicating that there are further painful cuts still to come. It looks like he's going to shorten up the duration of the energy relief package. That's going to happen. We've already heard the announcements on corporation tax and some of the other taxes that we're going to change. I would say that this is now looking like it is the policy. The policy of this sort of dash for growth that Kwarteng and Truss put forward has been completely reversed. We talked on Friday about the fact that we wanted, the UK needed a more sensible approach. Given the market reaction that we saw before and afterwards, this new policy will be seen as the more sensible.
Hey, Guy, looking forward to catching up a little bit later. Guy Johnson out of London on Chancellor Hunt's big U-turn and promising even more. I go back to that line from Kit Dukes of SocGen from earlier this morning, the title of his morning note, Goodbye Crisis, Hello Recession, the Vigilantes win. The Vigilantes, Tom Keene,
this is so important, and it's not the cliche of the edge of the bond vigilantes.
Sure.
It's the equity, bond, currency, and commodity vigilantes. And I'd really look off the messaging in Washington that I heard, particularly off mic, at the currency vigilantes, what we're going to do about those available to swap lines and those that are not available. And you wonder where the United Kingdom fits in there.
The President of the United States weighing in on the situation in the UK as well, Tom. They've not been scared of doing that, saying that the plan to cut taxes on the wealthy was not a good idea, and he wasn't the only person who said it was wrong.
Yeah, I'll go with that. I just did some math here on the Bloomberg Financial Conditions Index, and the United States, as a general statement back 20 years, is more restrictive right now than Governor Bailey. I don't know what to make of that.
Can I just throw this in there on tax policy in the UK versus the US? The top bracket here, 37% for federal income tax. When do you start paying that? 540 in and around 540,000. Do you know when you start to pay 40% in the UK? 50,000 sterling. 50,000 sterling. I'm not sure the President of the United States is in the greatest position to talk about how much the wealthy is paying in taxes. It's a highly progressive tax code in the United States, and it's something that Social Democrats in the United States don't really communicate to the electorate very well. The European model is based on getting many more people to pay a lot more in taxes,
yes,
and not just
in France particularly.
Not just the upper echelons of society. That's a major difference that is just not discussed on this side of the Atlantic.
I think it's true, and it's again the shift from my youth over to where we are now. And that, as you say, it's much more progressive. And of course, the Trump tax cuts, whatever anybody thinks of the politics, they were popular.
Ibrahim Rakbari is going to join us very shortly on Citi and what do you call them, the FX vigilantes?
The FX. This is my major message from
vigilantes.
IMF World Bank. The FX vigilantes are out there with a vengeance. Look at yen this morning. We haven't even talked about it. 148.67.
The other thing the president said, Lisa, I'm not worried about the dollar, I'm worried about the rest of the world, but the rest of the world is worried about the dollar.
Well, yeah, but the U.S. isn't worried about the dollar as much, and they don't really care as much about the rest of the world. So try to square that.
I'm pretty confused by that. Futures this morning on the S&P.
Confused?
Up by 1.2. I'm always confused. They got it done against the Dodgers, didn't they?
Stayed up.
I saw that. It was a good game.
Phenomenal. Real baseball.
Live from New York City this morning. Good morning. Getting about this Monday morning on the S&P 500. Here's the price action for you on the S&P. Elevated futures pushing higher on the S&P and on the Nasdaq too, up by 1.35% on the Nasdaq 100. On the S&P 500 up by 1.2%. Snapshot of the Treasury market for you. 2s, 10s and 30s. Yields lower by 8 basis points on a 10-year. 393.85 through 450 on a 2-year last week. What a move that was. We backtracked. We're down 5 or 6 basis points to 443.90 on the week last week. 2-year yields climbing for 6 straight weeks. Your 10-year yield climbing for maybe even 11. Can you get your head around that? 11 weeks? 11 weeks
no,
that 10-year yields have been climbing?
I can't get my head around this. And Lisa, help me here quickly with the mortgage. 30-year mortgage rate, I can't get my head around it.
Yeah, 6.9%, I think, of the average. And it comes because you are seeing this expectation. Jim Bullard, we haven't mentioned this yet, over the weekend was talking about the likelihood of a 4.75% Fed funds rate by the end of this year, that he sees that as a possibility. That is a game changer for someone who really has been out front in many
So
ways.
the conversation he teed up, which was interesting, is that you use the December decision to bring in what you want to do in 23.
Agreed.
Perhaps into
Front-loaded.
December. We'll see. We've got a lot of data between now and then. Got a lot of headlines to throw into the UK market for you as well. Look at gilts, look at sterling. Yields come down by 38 basis points on a UK 30-year, down 36 on a UK 10-year. These are truly historic moves in the gilt market off the back of a couple of headlines from the Chancellor, several. They're backtracking on pretty much all of the tax cut plans. The support they were going to offer individuals for offsetting some of the pain in the energy market. They're going to tighten up the duration of that support as well. And ultimately, Tom, what they're communicating is there's more to come. There's more to come.
Absolutely. And the standard deviation study was at agonizing 7 standard deviation, and we're now down to about 2.5 standard deviation. Still tension there, but nothing like what we saw. The research piece of the weekend in foreign exchange, Ibrahim Rabari wrote it. He is global head of FX analysis at Citigroup. We're thrilled he could join us after his attendance in Washington. Ibrahim, what I noticed in Washington is little focus on central banks and maximum focus on dollar liquidity among the flush countries and the ones more challenged. How critical is a dollar shortage worldwide?
Well, I would say the dollar was the talk of the town in Washington, but the message that we came away with was actually a little bit different. We did come away with thinking the Fed is still the central focus. And when it comes to the dollar, there's a lot of concern, but really the sense there isn't very much that could be done about it unless the Fed was going to veer off its unique focus on inflation at present. And when it comes to foreign exchange markets, as much of a concern as they are, right now they seem to be operating in a relatively orderly way. So yes, FX funding markets have started to show some signs of concern, but we're not nearly at a point where policy interventions are likely to be imminent.
I've got to go to the immediate, Ebrahim. What does the Bank of Japan, the Ministry of Finance do in Japan with their unique experience? What is the reality of a second intervention's efficacy after a failed first intervention?
Well, we expect more of the same. So we think that second intervention is going to come likely very soon, could be as early as today. And we saw the rhetoric ramp up late on Friday. And at the same time, we got Governor Kuroda reassert that Japan was different, that more monetary easing was required to bring inflation back up. So we see no reason for the efficacy to change in the Japanese case. And therefore, we do think that just as in the first case, dollar-yen would come down once you see those signs of intervention, and then it would creep right back up as U.S. rates go back up.
Well, Ibrahim, some people say it's not a failed intervention the first time around. Their goal was simply to slow the pace of the depreciation of the yen versus the dollar. If that's the case, where is the new red line in the sand, this idea of when they will get really concerned and have to rethink a whole host of issues? Is it 150? Is it 160? Is it 180?
So I have sympathy with that statement. So we think there is no clearly defined red line, but if there is one, it's probably defined by the politics or when inflation starts to credibly be above 2%. And that is certainly north of 160 on that latter criterion. And we don't think the politics will probably become acute before then. So it's quite a long way away from here. And until then, Prime Minister Kishida in New York said himself that it was dollar-yen moving 30 handles in a year, 2 handles in a day that was raising his concern. So it was about the pace of appreciation in dollar-yen, not the level. So we don't see a line in the sand anywhere close to the current level.
So perhaps that's the future crisis. The current crisis, or perhaps it's been somewhat averted, is in the United Kingdom, where we're going to be hearing from Jeremy Hunt a couple of times throughout the day, trying to stave off some of the pain that we saw over the past few weeks of volatility. How much credence do you give to this idea of foreign investors coming back to the UK at a time when the bond vigilantes, if they won, that means a sooner and potentially deeper recession?
So we think the bar for foreign investors to return to the UK en masse is very high. And at the heart of that, I would quote what we think are probably the two most relevant statistics: an 8% current account deficit, which I think reflects some of the broader challenges the UK is facing, and real interest rates that are still just about negative, and certainly 1 to 2% below those in the US. So I think in that kind of environment, the bar for foreign investors to see major appeal in the UK is incredibly high.
It was something, Ibrahim, to talk to Raghuram Rajan, Abu School, the former leader of the Indian Central Bank, about the flow realities of emerging markets. Is it like the 90s for emerging markets right now?
Well, I would say there's a lot of optimism, maybe a touch of complacency when it comes to the large emerging markets at present. And if you take foreign exchange as an example, the appreciation of the dollar has been much more extensive against developed markets than it's been against emerging markets. So at present, we see more concern about frontier markets, a lot less about the emerging markets. But one of the issues I'm concerned with is that could change, that maybe there is a bit too much complacency, that the large emerging markets are in a better position on the balance sheet side, economically, to some degree, even for inflation. So we're concerned, but the base case is that maybe we have to watch some of the developed markets, like the UK, a bit more closely than.
There's all this macro babble, Ibrahim. Where's a trade I can make money on into Q4? I mean, forget about the IMF 60,000 feet stuff. Where can I make some money in the next 90 days?
So we think it's more of the same. So that pattern of higher global interest rates, lower equity prices, and a stronger dollar, we think will continue into year end. And there are these balance sheet pressures that make that even more likely. So in foreign exchange, we see further dollar upside against, in particular, the risky foreign currencies. So, for example, continuing to be short the Australian dollar against the US dollar, we think has promise into the end of the year.
Just to be clear, to elaborate a little bit on that point, is the faith in a stronger dollar from here predicated on this idea that the Federal Reserve is going to raise rates close to 5% by early next year? Or is it predicated on the idea that the economic data coming in will continue to be strong, and that is the reason for these rate hikes, that really it's the resilience of the economy rather than the rate hikes themselves?
The two are related, but I would put more weight on the Fed and those rate hikes. And that is because they do reflect to some degree the economic outperformance of the US. But the central driver of dollar strength has been the decline in asset prices around the world. And for that, Fed interest rates and US real rates are the primary driver. So both matter, but it is more about the Fed right now than about US growth.
Hey, Ibrahim. Always wonderful to hear from you, sir. Ibrahim Rakbari there of Citi. The range that we've had on sterling on cable over the last few weeks has just been phenomenal. 103.50 at the lows on cable. That was back on September 25th. And this morning, Tom, briefly back through 113. Right now, 112.70.
Yeah, and again, that frames it out that we're not back. I haven't done a study of where it breaks out, 118, 120. I don't know where it is, but we're nowhere near that word reversal. And I think that's evident across every feature of this debate.
Let's see what we get from the Bank of England and Governor Bailey a little bit later in November 3rd. There was talk of 100 basis points, 125. With this budget, does he have to go as fast as people thought he did just weeks ago?
The market is saying no. The market right now is pricing in a slower pace of rate hikes. But Andrew Bailey has underwhelmed the market at several consecutive Bank of England meetings in terms of how far he went. And will he have to do better than that this time around? Because you could say that we staved off, or we got a cap on how high yields could go, or how low, or a floor for how low the pound could go. Still, though, as you point out, the levels are a far cry from what they were just weeks ago. And the risk premium built in for some of this uncertainty, as you pointed out yesterday, is going to be something that stays around for a bit longer.
How deep are the scars in sterling assets? There's one dimension, one aspect of this announcement from the Chancellor that jumps out to me that I think at some point we'll have to revisit. In fact, we know we will. April 2023 is when the support for the energy situation will end. And I wonder if you have to revisit again that, Tom, going into next winter.
That's a really important point.
Is this a single winter issue?
Exactly. And you've been good on this. Am I right, John, that in a lot of Europe, they're already looking at it as a two-winter issue?
Well, the original plan was a couple of years. So we were already planning for, say, 2 years of this.
But London's really not doing that.
Not now. They've reversed that plan. And in Europe, I think we're all starting to have that conversation in a much bigger way. Not one winter, maybe several.
And the problem is that how much investment can happen if the bond vigilantes are back? And I keep going back to this, and it's about Europe, but it's also the U.S., where suddenly, as we have 22 days till the midterm elections, Social Security and Medicare spending is a massive issue, because where do you get the money to spend on some of these issues, whether it's energy or anything else, at a time when the cost of financing is so high?
I can't think of the last time this happened, Tom. I'm thinking back maybe to the Eurozone crisis and pushing out Berlusconi in Italy when the markets basically forced the government to push people out and do something this big in a G7 economy.
Again, the sea change here is we're getting back to a risk-free rate. We're getting back to the G in gravity, as Taleb talks about. And this is when you have that, John. I mean, it's like Italy or it's like that. Can I talk about another restructuring this morning? We're going to talk about it later. Sri Natarajan to join us in the 8 o'clock hour. Goldman Sachs is on the edge of trust. Solomon is like doing a Liz Truss.
Pushing people out.
I don't know what's going on there, but this is a really big deal for global Wall Street in New York Wall Street. It's a Goldman Sachs do-over.
A reshuffle of individuals. What about a corporate restructure in terms of actually letting go of maybe initiatives that you have started and they're not going so well?
Below the radar, and Srinatarajan is saying this should be above the radar. Is the Goldman Sachs Consumer Bank a failure?
Marcus?
You
can call it that if you want to. I'm not going there.
I don't know. It's a big deal.
I think we get Goldman numbers tomorrow, don't we?
Yes.
Bank of America numbers could be due any moment now. Coming up in a few minutes. Futures right now at 1% on the S&P. We're bouncing back from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Newly appointed UK Chancellor of the Exchequer, Jeremy Hunt, set out plans to try to bring order to the UK's public finances and reassure markets after Liz Truss's economic programme triggered weeks of turmoil. He announced a further rollback on some of the tax cuts planned by Truss and a shortening of a planned universal energy support.
No government can control markets, but every government can give certainty about the sustainability of public finances. And that is one of the many factors that influence how markets behave. And for that reason, although the Prime Minister and I are both committed to cutting corporation tax, on Friday she listened to concerns about the mini-budget and confirmed we will not proceed with the cut to corporation tax announced.
Meanwhile, Hunt will address Parliament with more details later. Now, China told its state-owned gas importers to stop selling LNG to energy-starved buyers in Europe and Asia in order to ensure its own supply for the winter heating season. State-owned importers had been reselling LNG to Europe, offering some relief. Forecasters for a small gas supply deficit are likely to have spurred the move by Beijing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Whether the committee would want to pull some proposed or thought of policy rate increases from 2023 into the December meeting, I think that's a judgment it's premature to make.
The Fed ready to go again in November, perhaps by another 75 basis points. That was Jim Bullard of the St. Louis Fed. Are these banks making money from these rate hikes? Shonali Bassett joins us now for more. Shonali, Bank of America out just moments ago.
Moments ago, you do see the same thing we've been seeing at the other banks. You see a rise in net interest income above expectations, but you do see provisions for loan losses higher by about $150 million or so, more than Wall Street had expected. Very clean numbers here. They have clean trading figures relative to Wall Street's expectations, met on a beat on FICC, met on equities, reported 0 days of trading losses. That says value at risk is broadly rising across the industry and keeping expenses broadly in line. So let's see how Wall Street continues to react. They got a little jump in their shares on Friday after JP Morgan reported. Are these numbers enough to keep Wall Street happy?
We are seeing about a 2.4% gain pre-market trading from Bank of America. Shonali, from your perspective, what's the most notable aspect here? We talked about loan loss provisions, not that much higher than what they had expected, right? And they really actually blew it out when it came to equity trading as well, which was unusual for the other banks.
Yeah, it is unusual. And then you look at what is going wrong in FICC, I would also say, because the question is roll forward. How much of an overhang will that be? They are starting to see some cracks in credit and mortgages. We've been talking about this. Is that going to start to hurt in future quarters? Really quickly here also, charge-offs from the prior quarter declined. So health of the consumer.
Very quickly, in their great PowerPoint, they get the best-in-class PowerPoint on the stuff. In consumer banking, they have 44% more Zelle transactions than written checks. I know, Shonali, you haven't written a check in 10 years. I'm still writing 10 a day out. Digital banking is the win here for these banks, isn't it?
It is the win, and it's also very political because are they keeping that branch headcount
Right.
alive as they grow digitally? They're being asked this by lawmakers. And again, Jamie Dimon answered the question Friday. Are they going to increase those savings rates for consumers as they go along?
This is a huge issue, Shonali. Thank you so much. And we're going to speak now with one of the experts here on your future of banking. And this dovetails into JP Morgan and Bank of America. Thomas Michaud is Chief Executive Officer of KBW. Keefe, Bruyette & Woods, of course, was Stifel, and is absolutely definitive on the pulse of American banking, small, mid, super regional, super Michaud, and the big banks as well. Tom Michaud, when do they capitulate and realize the future is digital banking?
Well, that's happening right now, right in front of us. I think what was remarkable during the COVID period was how much digital engagement there was. And we've been watching very carefully to see if it would slip back after COVID thankfully came to an end. That hasn't happened. Digital engagement's up. We think it's gonna be good for consumers. It's gonna take friction out,
right.
As well as the fact that it's gonna help with expenses with these big banks and make them more profitable.
Tom, I know you're not involved in the Kroger-Albertsons deal. Maybe it's a little bit outside your remit, but there we are with finally a new risk-free rate. Finally, we've got the math back to what it was. Are there zombie banks to be merged?
We think consolidation will restart. Historically speaking, when things are disorderly is when consolidation in banking slows down. Stock prices have been very volatile, a lot of concern about the economy. My expectation is as soon as things settle down and get orderly again, we're going to see consolidation happen because scale is working in the banking industry. And a lot of it is what you talked about earlier, revolving around the ability to invest in technology. And that's one of the themes in this industry.
Tom Keene mentioned this whole question of consolidation and mergers and acquisitions. And I wonder about some of the debt, the financing for some of these acquisitions that were arranged earlier this year that banks are still hanging on to. How concerned are you, based on the increase in loan loss provisions, in the sense that perhaps it's not all in there, about this being a potential risk in the future?
The reality is that asset marks, which is what you're talking about, which is what are the valuations of commitments that were made a while ago. Asset marks have been negative for the banking industry as they've been really across the board in finance. And so we would expect that there would be negative marks to things like that, as well as, frankly, to bond holdings that's been happening. And that's really one of the themes. That's why we think during this Bank of America conference call that's coming up, there's going to be a lot of talk about tangible capital and other capital ratios. And frankly, Bank of America, it was our expectation they were going to improve their capital ratios and be in a very strong position. So the reason why these banks have been carrying as much capital as they have, so they can withstand easily things like you just asked about loan marks. So we would expect there will be negative loan marks, but we also believe that the banking industry is well capitalized and can handle it.
Tom, right now we're seeing shares of Bank of America above 3% in pre-market trading. Who do you think is going to be the winner, and who do you think is going to be the loser of this earnings season?
The banks that have a lot of net interest income, it's almost like a continuum. If you've got a big investment banking operation, you're under pressure. Just so you know, our analysts are looking for down 55% in total across the board investment banking revenues for the third quarter, but only down 2% linked quarter. So it suggests to us the year-over-year pain is real. However, we think we're bouncing along a new level. If you're a regional bank, if you're one of the big super regionals, they're in the second quarter, we believe, of a 4-quarter run where they're going to show 20% year-over-year net interest income growth. That really has not happened in my career. And so it is very, very strong on the revenue side.
Hey, Tom, wonderful to hear from you, sir. It's good to catch up. Tom Michaud there of KBW, the stock up by 3.5%. What we're seeing, TK, from the banks in the last couple of days is the benefits from higher interest rates. What you're arguably going to see in the coming quarters is the harm done by higher interest rates when the economy starts to weaken and soften a whole lot more.
We're going to see that. And Bloomberg has a real heritage here of looking at FIC and looking at banking and all that. I'm looking at what you and I talked to Moynihan about in Davos, which is the grinding grind of consumer banking. And as Michaud just said here, I'm looking at double-digit loan growth, double-digit this, double-digit that. On the revenue side and the grinding consumer side, this is a constructive story.
And that's great because you get to pass on higher interest rates for business and consumer loans. Fantastic.
Well, somehow
news.
we'll survive
and you're
with
not
higher
passing
interest
that on
rates.
to the deposit base. Brilliant news. But what we're starting to see crack in the last week or so, and Shonali, you can speak to this. auto loan origination, mortgage origination. That's the side of things where you can start to see things punching the other way.
They sure do. And I also took a quick look at the presentation. You see credit card delinquency, 30 days overdue, ticking higher as well. And the credit card business is really where you're seeing a lot of these banks punch a lot higher in the net interest income and the loans that they're making there.
This is what's interesting about this moment, Tom. The banks are telling you kind of what we already knew. The economy's okay. In the third quarter, it was all right. But we're preparing because we think in the next couple of quarters, things are going to get worse.
We didn't go to Michaud on this, though, but with the Goldman Sachs restructuring that Natarajan wrote about today, you wonder about traditional banking, more of a Goldman Sachs-y kind of economy, is how much is the restructuring going to be into year-end?
Can you tell me what a Goldman Sachs-y kind of economy is?
Lack of consumer banking. I mean, they did Shonali, Marcus a failed proposition this morning?
Listen, so much of this was about lowering Goldman's cost of funding and diversifying Goldman Sachs, but 60 to 70% still comes from IB and trading. What are you going to do?
Tom wants to know if Marcus is a failure. That's all he wants to know. Shonali's not going to go on the record, Tom, I tell you.
Absolutely not.
It's not happening.
Not happening.
Steve Cheverone in the next hour of Federated Hermes. Steve might go there, TK. Futures on the S&P 500 up more than 1%. Live from New York. This is Bloomberg.
Under the circumstances, the Fed's going to continue to raise rates aggressively till they see the need to slow down.
I think the Fed is going to continue to be on this path for quite a few months.
I definitely think we'll see another 75 basis point move in November.
The more aggressive they get, the more you're going to bring recession fear as the primary fear over inflation.
Because of the Fed overdoing this, we're going to end up back where we were 10 years ago.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide on TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures up by more than 1%. TK, I've got to say, actually a pretty interesting session already this morning, particularly in foreign exchange.
Yeah, I thought we picked up right off the last number of weeks where you have to look not at equities, bonds, currencies, commodities, but the holistic whole. And you're right, foreign exchange is the litmus paper that we've got. Front and center is a yen running away, 148.85. All you need to know if you don't keep score on yen is that is troubling for the leadership of Japan.
Inching closer and closer to 150. I can tell you sterling breaking out a little bit earlier this morning as well. Cable, the pound against the US dollar, 112.79. Call it 112.80. Lisa, briefly, or 113.
Basically, the market has won. And the power of the market right now. Who was it who said if they come back, they want to come back as the bond market after they die?
Mr. Carville.
Mr. Carville, how much is that what we're seeing right now? And how far can that go? Is it just United Kingdom, or does this go further at a time when suddenly there is a rate that people have to pay to borrow money?
So you've got the U-turn from the Chancellor on a range of tax cuts. He's also done something on energy. He's shortened the duration of the support that he will offer to the UK consumer. Javier Blas out on Twitter moments ago, bringing up a really important point, Tom, on this, and I think this is going to get a lot more attention. The UK government has admitted, in Javier's opinion, it does not have the money to subsidise energy consumption for everyone beyond 6 months. From April 23 onward, many voters will feel the pain of high gas and electricity prices. He goes on to say, Tom, it may be local politics, but it has implications for Ukraine.
Yeah, well, I'll go with that. And what really upsets me here is ex-China, where there's clearly a slowdown. Witness the GDP pause. Where would Brent crude be now if you had legitimate Asian demand? And the answer is the UK at 110,
on a
120 Brent.
Coincidental that you think that they have the big meeting over in China and the third quarter GDP number is just delayed?
No, I don't think that was
kicked into the long grass for now.
Exactly. And basically, people are expecting, in general, the economy to come in with the slowest pace, one of the slowest paces ever. 3.3% is the economist's view for growth.
Well, the
GDP growth
first time I ever heard this was from Alarian. 3% GDP is a global recession. We're there.
A two-handle. We're talking about twos, Tom.
Yeah.
Now for 2023.
I didn't know that. Excuse me. I've been down at Martin's Tavern in Georgetown.
You weren't listening to what they actually had to say
on
the forecast.
French onion soup.
I bet you were. Futures right now on the S&P 500, spiked French onion soup. I'm sure that's delicious.
It is. It's best in Washington. It was there.
What?
Up more than 1% on the S&P 500. Yields lower by 7 basis points. 394.46. Talked a lot about the 10-year climbing
Are you used
for
to those
11
yields yet?
consecutive weeks. What's that,
I'm
Tom?
still not used to those yields. I look at them on the screen. It's like from another.
Hey, to see the front
place.
end, the 2-year through 450 last week, just up and away, Bramo.
I mean, honestly, and this again goes to this question of, is Jim Bullard really the new tea leaf on the Fed, saying that 4.75% could be the Fed funds rate as of the end of this year? We get more from Jeremy Hunt, the UK's new Chancellor of the Exchequer. He has already released his statement earlier, but he is going to speak with the House of Commons at 10:30 a.m. Eastern. How much more clarity do we get on some of these plans? Like what kind of triggers there could be to extend some of this aid, and how much, this is more prevalent, how much are they going to cut spending? Right now, we are seeing 30-year yields in the UK come down. You are seeing the pound strengthen. But really going forward, how much can you get strengthening in the pound when you are kind of guaranteeing a recession and now potentially a deep one if you don't have fiscal spending as a relief valve? We did get Bank of America earnings. We get the earnings call at about 8:30 a.m. How much can they speak to the forward look in terms of what kinds of credit cracks, what kinds of problems with delinquencies, what their threshold will be for lending at a time when possibly consumers will not have as much to repay their loans? And at 8:30 a.m., we get U.S. Empire Manufacturing going back to where are we in this cycle, right? People are expecting some sort of material slowdown in manufacturing. That it was the front of the inflation and the boom. Will it be in the front of the other side? What happens if it's not? Because we have seen, John, so many economic surprises to the upside, which really has been treated as bad news for a market concerned about a Fed.
Elisa, thank you. Brian Moynihan over at Bank of America on the economy, seeing a resilient consumer with cash to spare. The one thing that's jumped out for all of us, I think, over the last couple of days, Tom, pouring through the bank numbers, the provision for credit losses. So that's $898 million over at B of A for the third quarter. The estimate was 766.1. I think the direction of travel here, Tom, tells the story.
It's there, and it's always there when you have some form of slowdown in GDP, and we've got that slowdown in place. I think there is a caution or even a Bramo gloom element to the bank financial story. But the other side is the efficiency they're getting from digital banking. And as Michaud said earlier, Tom Michaud of KBW, a Stifel company, as Tom Michaud said as well.
What's that about? Why is everything a Stifel company these days?
I don't know. It's like Bloomberg surveillance, a Ferro company.
A Ferro company?
It's like, you know,
I think Mike might take issue with that,
He
Tom.
might.
Steve Chevrolet joins us now, Head of Multi-Asset Solutions at Federated Hermes. Steve, we've had some earnings over the last couple of weeks. I'd love your response to them. What takes your eye? What catches your eye?
Yeah, look, I think you guys are touching on it. It's a consumer that's still relatively strong, but with risk ahead on the credit side. And I think that's what we're seeing. This cycle is being defined not by its severity, but by its duration. And what you're seeing is that despite credit card balances being very high, despite consumers having eaten into savings, despite wealth having been destroyed, consumers really still aren't worried about losing their jobs. And so they're still hanging in there. And this is all taking longer to play out. I think they will crack, but I think those cracks are to come in 23, not necessarily right here and now.
Steve Chiveron, you don't remember the zombies, but one Stevenoff does, as I do. Great singles from the 60s as well. Let's talk about Stevenoff and the zombie companies right now. Are the zombie companies going to roll up with this new rate regime?
Well, I think you're certainly going to have a lot of pressure on it, because what we've seen, and I think what the UK has tested and shown, is that the old system of stimulating your way out of any kind of recession or financial market pain isn't being allowed. The inflation is holding you at bay there. And so you're in this scenario where you're going to have a slowdown, you're going to have pressure, you're going to have credit cracks, and the federal government and central banks can't come to the rescue as quickly or as easily as they have had historically. That's why this is, I think, a long, drawn-out, multi-quarter economic downturn, not something that's going to reverse quickly.
I was reading through your notes, Steve, and I pictured a big mattress that was stuffed full of dollar bills, and that was the entirety of it. Is that really what you're doing, or is there sort of a more nuanced approach?
Well, no, it's much more nuanced than that, right? You certainly don't want to put your cash under the mattress. You want invested cash. Now, I'm not endorsing Tom's triple levered cash fund. Let's be clear. But prime money market strategies, you can go out a little bit further on the curve. That 3 to 6 month part of the curve, you want to have liquidity within your cash portfolio. You want to be able to take that money and move it out to longer duration fixed income when the time comes. And we think that time is approaching, though it's not here yet. But you can get pretty darn compelling yields as you go into kind of cash strategies and you go a little bit further out the curve. You know, you're at 3.25 on a prime cash strategy, and I think you're going to be over 4 within 2 weeks. That's not a bad place to wait. And then we think you'll be able to deploy that in the not too distant future with some compelling opportunities. But yeah, cash is king right now.
Steve, you talked about going further out along the curve. You said now's not the time. When the time comes, walk me through the process you go through that guides that decision. What do you look at?
Yeah, there's a lot going on. There's a game of chicken going on right now. You know, the biggest risk to the financial markets are rising yields. And what you've seen is that the U-turn, or the initial U-turn in the UK, has had mixed results. And so I think the Fed is trying to hike and crack the economy, get the unemployment up, get the growth down, and then allow bond yields to fall on the back of that as recession overtakes inflation is the key concern. But that hasn't happened yet. What's happening is with each hot inflation report, the terminal rate goes up just as rates do, and the whole thing moves up.
Yep.
And bond yields continue to move higher. That's the dynamic that needs to stop. You need to see inflation stop rising for a minute, at least on the core readings. And what we're concerned about is with services moving up, if you get any move higher in energy prices, a $92 average WTI price in December, and you could very well have a new headline high in inflation in the U.S. And that's, I don't want to be buying long duration in front of that.
Hey, Steve, wonderful to hear from you. Steve Chevron there of Federated. Tom, to Steve's point, it's not just that inflation keeps coming in hot, it's that the output, the economic numbers keep coming in resilient. And this Fed, to Steve's point, you're pricing a higher terminal rate, and the whole curve just shifts. It's not like twos are up and 10-year yields are down. It's just the whole curve up.
Yeah,
higher.
This is a really important distinction of a shift versus the dynamics that are out there. This was discussed a little bit at IMF, and the basic feel was from Stanley Fischer's ultra-accommodative to accommodative to some form of John Williams neutrality. I'm going all our start on you. I'm trying to dazzle you.
Thanks, I appreciate that.
But are we near restriction? And I didn't hear anybody say we are.
You know that game we play, things you never want to say? This is something you never want to say as a spokesperson for a government. Liz Truss isn't resigning as Prime Minister. I mean, we should do an end of year programme just based on headlines of things people should never want to say. That's near the top, Tom. Liz Truss isn't resigning as Prime Minister. When you have to come out and say that as a spokesperson for a government, Tom, it does speak to the moment that the UK's in.
Yeah, it is as well. And I got to be careful here, but somebody was out measuring the duration of Truss versus the White House duration of our good friend, Mr. Scaramucci. And
I saw that
she's
tweet.
Two Scaramucci's.
Two Scaramucci's.
Two Scaramucci's. Maybe
how did the Chancellor get on? Brutal. Brutal. We'll hear from this Chancellor again.
This, John.
We'll hear from this Chancellor again a little bit later on this morning over the UK, and I'm sure we'll take some of that footage for you. But ultimately, at the end of this month, we'll also hear from him in a detailed way when he announces more UK measures, Tom. That headline crossing too. There is more to come.
So you think there's some substance here at 10:30 this morning in New York Times?
I think we need to work out what the more is. And it sounds like spending cuts. And this market hears spending cuts and a reversal of tax policy.
Or actual nominal spending cuts?
We'll see.
Wow.
Coming up, Rob Waldner, Chief Fixed Income Strategist at Invesco. You won. You won.
Yeah, but you don't even mention it. You give equal time.
I said the Liverpool won, and you said Spurs won.
Spurs won.
And you had airtime.
It was a fair penalty kick. Even Kane.
Was it a good penalty?
It was a legit penalty.
Nice. Are we done? Is that enough Spurs time?
That's enough Spurs time.
It's like hand-holding from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Here in the UK, the newly appointed Chancellor Jeremy Hunt has set out plans to try to bring order to the public finances and reassure markets. That's after Liz Truss's economic programme triggered weeks of market turmoil. He announced a further rollback on some of the tax cuts planned by the Prime Minister and a shortening of planned universal energy support.
It is a deeply held conservative value, a value that I share, that people should keep more of the money they earn. But at a time when markets are rightly demanding commitment to sustainable public finances, it is not right to borrow to fund this tax cut.
Meanwhile, Hunt will address Parliament later with more details. European Union nations have agreed to a new package of sanctions on Iran over human rights violations related to the death of a young Iranian woman who died in police custody after allegedly flouting strict Islamic dress codes. Austria's foreign minister says the package targets 11 Iranian people and 4 entities responsible for serious human rights violations. Ministers are also discussing reports about Iran's military support for Russia in its war against Ukraine. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
I remain extremely confident about the UK's long-term economic prospects as we deliver our mission to go for growth. But growth requires confidence and stability, and the United Kingdom will always pay its way. This government will therefore take whatever tough decisions are necessary to do so.
The Chancellor of the Exchequer, Jeremy Hunt, out of the UK just in the last hour. You know, we played that game about filing things you never want to have to say. I think you can file that one in that particular category for this Chancellor. The UK will always pay its way. Tom, things you never really want to have to say to the market, and gilts responding, yields lower, yields much lower.
There's a complexity here. We're going to go to Lizzie here, which is going to help out as we went to Guy Johnson earlier. But to me, John, the major parsing here of a given budget for any nation, any time, is when you say budget cuts, are they inflation-adjusted budget cuts, real budget cuts? Are they outright nominal budget cuts, or a combination of the two spread out among different programs? We're going to have a lot of nominal and real discussion here.
We'll get more detail ultimately at the end of this month. The one that sticks out for me, and I keep going back to this, the dimension of all of this that jumps out to me is the support to offset the pain that comes from higher energy prices. And the fact that that's now been cut down from a couple of years just through April 2023. They might revisit it, Tom. They might have to extend it. Maybe for this market, they thought it was too much too soon all at once, and they'll come back in April and see how things look. But this is going to be more than a one winter issue for many people.
Okay, but what's the housing overlay here? Is we're having a housing discussion in America as well as one part of that CPI
The
mix.
pain's coming, without a doubt.
In the United Kingdom.
The Bank of England's still got to put rates up in early November, on November 3rd, maybe by 75, not for me to say. To your point, Lisa, we thought the Bank of England would do X and the governor often does Y, so I'll save that debate for another day. But yeah, it's getting more expensive, Tom, to service a mortgage, without a doubt.
I mean, and I look at the unrest here. I mean, are there protests in the United Kingdom, John, like we see protests in France this morning?
Well, I don't live there, Tom, so I haven't.
No, but come on, you're all wired up. I mean, come on, you're wired up from there to Aberdeen.
Not in the same way you are.
Aberdeen is spelled correctly, unlike the financial
You've got
company.
more subscriptions to British papers than I have.
I do. I read the New Statesman cover to cover.
And what did you learn this week?
I learned that their articles are so damn long they're unreadable.
Like the New Yorker.
Oh no, way longer than that.
Longer than that.
Longer. The new New Yorker. They're like the old New Yorker.
I can't get through the New Yorker.
Yeah, I'm
it's just
the
too
same
much.
Way. I'm the same way.
It's too much.
Should we go to Lizzie?
I think you should do
Lizzie
that.
Burden in
5
London
minutes
right
ago.
now. She is wired into what we're going to see at 10:30, 7:20 Wall Street time. Let's call it 3 hours. Lizzie, what are we going to hear from the Chancellor of the Exchequer?
Well, Tom, you were asking if there are protesters in the UK. I don't know if you can hear the guy over behind the camera who's trying to get his music played in the US. But what are we expecting? We're expecting more detail on this absolute shredding of Truss's economic policy, which is ironic because when I was at Downing Street earlier today, there was a shredding company's van arriving there, and it's really in tatters, Trussonomics at the moment. There's all of the reversals on the tax cuts, but as John hinted at, perhaps as humiliating is this rowing back on the energy bailout, because all the way through when Truss was having to row back, do the U-turns on the top rate of income tax, corporation tax, Truss continually taunted Labour that her energy bailout was bigger than Keir Starmer's. But now Jeremy Hunt is admitting that in order to make the books balance, they're going to have to make it more targeted support. It was a huge criticism of the bailout that people who didn't need money were getting it, but really the hope will be that this will calm the markets a bit, balance the books.
Do we have to pay royalties to the Benny Hill estate?
Is that what that is? Is that Benny Hill?
I believe so.
Very good.
This is our soundtrack now on Bloomberg Surveillance.
New tune, you know.
Lizzie, this probably works for the whole conversation on this programme daily.
Lisa will remember.
Go on, Lizzie.
When Lisa and I were on the day of the mini budget, he was playing Money, 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 because that day it really was a rich man's world.
Lizzie, let's get to late October, early November, and tell me what more we can expect from this Chancellor at the end of this month and what it means for this Governor at the start of next month.
Well, he needs to balance the books, and this what he's announced so far is expected to save £32 billion. But in terms of the black hole that is left, the OBR was projecting a medium-term fiscal hole of £70 billion, so it still leaves 38 to get debt falling as a share of GDP in 3 years. What you might also see is a rowing back on some of the supply-side reforms that were really, really controversial. The other side of Trussonomics that just aren't likely to get past the parliamentary party. And when you get to that stage, you have MPs asking, what is the point now of having Liz Truss at number 10 at all? The answer when I'm speaking to MPs in Westminster is very much it's a question of when, not if, she's going to go.
Lizzie, I got to say that the music really adds to this feeling that we were talking about on Friday, that it feels rather circus-like in terms of the whole upheaval. Is there any chance that Liz Truss keeps her job? Is there anything that she's doing now, especially as she cedes some control and frankly, the helm to Jeremy Hunt to really paint an agenda that's a lot different than what she had initially put out there?
Jeremy Hunt is her only hope now, which is ironic given he doesn't have Treasury experience, he doesn't have broad support in the party. Remember, he's already had 2 failed leadership bids. But as you say, he's in the driver's seat, which is why lots of MPs are questioning whether they should just crown him as Prime Minister. But that would mean either another leadership election or bypassing the party membership, which would be ugly in either case. If there's a new leader, the mandate would be severely diluted. That would add to pressure for a snap election. And if you look at the polls at the moment, Labour would completely wipe out the Tory party.
Lizzie, enjoy the music, won't you? And find out if we need to pay anyone. Lizzie Burden, thank you. Down in Westminster. Mr. Stolfus over at Oppenheimer, he has thrown the towel in. Here's the quote from him and the team. We are updating our year-end price target for the S&P 500 based on the index's closing level of 35.83 last Friday. We now see just under 12% potential upside in the index by year-end to establish a target of 4,000. I think you all remember the previous target. I'm trying to bring it up right now. I believe it was something like 5,300 at one point from Mr. Stolfus. And Tom, that is gone.
This is the issue, and he's a grizzled pro, and he's been dead on in the great bull market. But if you put a level and a time on it, always you get in trouble. So I would suggest, we haven't spoken to him yet, but I would suggest he's extending out his optimistic view.
The last target we saw from John was 4,800. And that's now down to 4K.
Yeah, because the calendar's moving on. Year end is tomorrow.
Who's left?
Oh, I don't know.
Just to give up on this thing.
One person, Marco Kalanovic.
I thought he kind of gave up and said there's risk now you achieve that in 2023.
He pushed it out, but he didn't abandon the call.
OK. So what do you do now? I'd love to know. I'd love to talk to someone on the South Side. It's got no problem with getting it wrong.
No.
You know, people get it wrong sometimes. What do you just hold on to it for a couple of months?
You extend your time.
Or you just say next year?
X-axis, X-axis, X-axis.
My question is, how much can you really extend out when you have a Fed that has to move more aggressively simply because of the resiliency that we've been seeing?
Talk about fixed income with Bob Miller of BlackRock. That'd be nice. That's just around the corner. Live from New York City. This is Bloomberg. Live from New York City this morning. Good morning. Coming off the back of a week of losses on the S&P 500, just about after an ugly close last week on Friday. Bouncing back this morning, futures up by about 1.2% on the S&P, on the Nasdaq up by 1.4%. Helped out by the bond market, 2s, 10s and 30s. Yields come in, they drop away after kicking out higher, much higher over the last 6 weeks on a 2-year, through 450 briefly last week, on a 10-year yield climbing for 11 consecutive weeks. Your 10-year right now, 394.67, having a little look at a four-handle a couple of times over the last week and then backing away. The bond market in the UK, all over the place. We can take a look at gilts, 10s and 30s. Remember, the 30-year plus is where that gilt market operation was taking place. Well, that gilt market is helped out by this Chancellor this morning. Yields aggressively lower off the back of a reversal on tax cuts and even backing away on the duration of support they will offer to consumers in the UK around the energy crisis, and I think we can call it that. It will now go to April 2023. It was initially slated to last 2 years. Will they have to backtrack on that or revisit it later on? But ultimately, TK, we heard from the Chancellor. I think it's pretty clear the direction of travel here from this particular individual, and it's very, very different to Chancellor Kwarteng.
And it's about accommodation and restriction, and the Bloomberg Financial Conditions Index for the United Kingdom showing a new restriction. John, moments ago in the United States, the Bloomberg Financial Conditions Index shows new record restriction except for that COVID moment.
And Tom, that's the goal. It's the objective.
Yes, absolutely.
To get it there, keep it there, and wait for inflation to come down.
Yep.
And the problem they've got as a committee right now, and it's no good me sitting here and saying what I think they should do and what I see, it's what they tell us they are seeing. They believe in their minutes, Tom, that the risk of doing too little is bigger than the risk of doing too much. Many people on that committee believe that, Tom. That means they think they've got more work to do. And until they see inflation coming down in a more convincing way and cracks in the economy, which many people assume aren't there yet in a material enough fashion, Tom, to get them to back away.
I'd watch housing. That's all I got to say.
I'm with you, Tom.
The housing,
sure.
This is nationwide. It's not just about the big cities.
Tom, I think the phrase I've heard is housing recession. You get a housing recession and somehow the
but if you,
still
John, if you own the house and like Matt Miller, you bought it at the top of the market, it's not a recession, it's a depression.
Have you spoken to Matt?
I have. You know, it's 8,000 square feet, 8 bathrooms. A lot of people sharing
that pain. Well, get Miller on the show to talk about that in South TK. I'm not going there. That's the cross-asset price section. Let's get you some single names. We can do that with Lisa this morning. Hey, Lisa.
Hey, and I will say that depression is probably leading more people to stay put and not be as mobile since they do not want to sell their homes at this point and see the repricing. What I'm watching right now is a series of earnings showing the haves and the have-nots. And this really can be seen in the airline industry in particular. United Airlines coming out tomorrow after market with their earnings. And we heard from Delta last week how much you're going to see those airlines that actually cater to some of the business travelers and some of the upper end kinds of travelers do much better than, say, the JetBlues of the world that cater more to the vacations. United Airlines is up 1.9% ahead of the open. Delta up 1.7%. JetBlue lagging behind, but also up 1.4%. But year to date, you can see this divergence more clearly. And again, I keep coming back to the reason why this earnings season is going to be so difficult to come up with some sort of overarching conclusion, because you see pockets of strength, and a lot of those pockets of strength are dictated by the areas that cater to higher income individuals and businesses. United Airlines down sharply, but less than 20%. Delta down similar. JetBlue, Tom, down more than 50%, catering to Florida, catering to a lot of families, catering to vacations at a time when people are rethinking whether they really want to fly around. Because if you check out some of the airplane tickets, they're incredibly expensive, and the marginal money that people have to spend is declining pretty quickly.
My memory, this is all David Rosenberg, but my memory itemized, Lisa, was airline fares last inflation report were up 42%.
Exactly. And a lot of this stems from the business travel and people who can afford it. But a lot of people can't. And I know anecdotally of so many people who have canceled or not gone on vacations at this point, or just driven, because it is punitive for people who actually have some constrained discretionary income.
It'll be interesting to see on the cash flow front and earnings front how they do. Right now, and this is a joy, with the chaotic weeks that we've had, and a Monday into another week of chaos, Bob Miller joins us. He's head of America's fundamental fixed income at BlackRock with decades of experience. Bob, I want to cut to the chase in the great bond bear market. What is the level of pain on level? I was talking to Axel Weber in Washington, and he said, forget about the numbers, the spreads, look at level. Bond prices are down. What does it signal?
Well, Tom, I think that's a great point about spreads versus all-in levels. So the cost, debt spreads, for example, IG and high-yield spreads aren't at recessionary wides that we've seen historically, but the all-in cost of capital has gone up substantially, right? And in the investment grade space, you're talking about an index that's now a 6% yield. And in high yield space, you've got companies that were funding a year and a half ago at 4 to 5% that now can't get funded inside of 10 and may not be able to fund it all. So the cost of capital has gone up substantially. And I understand that there are a lot of really good, savvy liability management strategies that firms employed and households employed by refinancing their mortgages 2 years ago, and that you've got these very attractive liabilities on the balance sheet. But the incremental spend, right, the next thing that one might invest in,
right,
whether it's residential or commercial, is going to be substantially more expensive from a debt capital standpoint.
Let's talk about the great Dan Fuss at Loomis Sales, and he would say, that's great, you've got the free lunch of a high nominal yield, but do you buy that nominal yield into reduced credit quality across all of fixed income assets? Is there credit clouds out there that make this not an easy decision?
Yeah, I think so. I mean, look, you guys were just talking about this. The Fed is on a mission. This is a very intentional and aggressive tightening of domestic monetary conditions in an effort to slow growth, slow demand, specifically loosen up the labor market a little bit, to get inflation back to target. So definitionally, there are going to be some things that probably break along the way. It'll be really, really hard to do it without some of that happening. But I also think at the same time, here's one of the interesting things. Volatility is so high in the rates market right now that it's really hard to look, 3 months forward or 6 months forward. It's hard to look more than 3 to 6 days forward because the vol is so high, right? But I think if you can take a step back and think about the valuation of high-quality fixed income assets today, you can build a pretty reasonable portfolio. Treasuries, agency mortgages, investment-grade corporates, where you can go in and do the name selection so that you can avoid some of the more stressed or potentially forward distressed names. You can build a high-quality portfolio, intermediate maturity, in the 5 to 6% range, including treasuries. So you've got a flight to quality asset in there in a shock scenario. We haven't been able to do that in nearly 2 decades.
Yeah,
I mean, it's things are starting to look reasonable. I get it that we're probably not at the bottom, and there's more stress to come, but things are starting to look pretty reasonable if you can take a longer time horizon.
That is the key point. If you could take a longer time horizon, and I wonder about some of these mutual funds or open-ended funds where there could potentially be withdrawals, especially when it comes to investment-grade credit. It makes sense perhaps on a thesis basis, but on a real basis, investment grade is underperformed dramatically because of the rate story as well as this forced selling that we've seen from international investors to sell what you can, not what you want to. How much are you concerned about that creating some sort of fissure in the short term as you see things like what happened in the UK force some selling?
100%, Lisa. That is exactly the right thing to be focused on. We've seen this movie before, right? When you tighten financial conditions this aggressively, this abruptly, things are going to break. And where do they break first? Almost always, it's in the levered strategy, the levered business model. I would argue in the UK that yes, the push toward, a much more aggressive fiscal policy kicked off more pressure in an already deteriorating market. But the proximate cause of the real stress in the long end volatility was the levered LDI business model and the increased margin calls, right? So if you're levered, if you have to borrow to sustain your strategy, and importantly, if you have to pay higher margin costs, to maintain your leverage, you're in a really difficult spot right now. So those business models, kind of should be stressed. And I wouldn't be surprised if we don't see some more of that before this is over the next 3 to 6 months.
Bob, thank you, sir. As always, Bob Miller there of BlackRock. Just picking up on the UK at the end there. Got a 113 handle again on sterling against the US dollar in the gilt market. Let's pick out 30s because that's where the Bank of England was sitting, 30s and above. Your 30-year yield is lower, Lisa, by 42 basis points this morning.
And this feels more fundamental than some of the other questionable moves that we saw last week in response to temporary programs from the Bank of England. This is generated by a true fiscal response that people seem to like. There are some more details coming out. It is clear that Jeremy Hunt is leading the charge. Now we get more details at 10:30. How much does that really edify some of these moves and send them further down? And where are the scars?
I think if this inflationary boom, Tom, is followed by some kind of disinflationary bust, that the policies that were announced in the last couple of weeks in the UK will potentially be revisited. in the years to come, Tom? If we start to suffer with growth and have much more of a growth problem than an inflation problem, and to Steve Chevron's point of Federated, if we can get yields starting to come lower and not climbing, a lot of people might be clamoring for these kind of initiatives.
That is the study of history. I went back and I mentioned David Rosenberg earlier, and there's others besides Mr. Rosenberg who say, yes, you get this inflationary bout and it takes care of itself, and you get a disinflationary trend, and you look back to 47, to the Eisenhower deflation of 52, 53, you can actually get true deflation, albeit just for a little bit of time. But the point here is if you come on the U.S. continuum from 9%, what is the path and stopping point on the way to their vaunted 2%? That's a mystery.
Do you think the inventory story of the Nikes of this world, Micron, biggest part of that, UBS warning about Ford, GM?
Tangible but secondary. Dana Telsey with a blistering note this morning that the only thing that's working is luxury.
Well, except that services continues to climb. So how much does that offset the disinflationary force that you're talking about? And I've seen the discounts. They're not that big. I mean, have you seen the discounts?
Is that aimed at Target or Nike?
Nike more.
You're upset with Nike?
I'm not upset.
You don't think they're
I'm
good
just
discounts?
Saying, theoretically, if a child really liked, Air Jordans and the parent was still saying no, they're still possibly going to still be saying
that's not real. That's just
no.
That's not real? Or is that is a real conversation in the Bramo household?
No, I'm just saying it's theoretical.
No, it's just in case you were a mother who had a child who wanted some...
Correct.
Some Nike.
Yeah. They're still really expensive. I'm just saying.
Would you explain to me why Comme des Garçons has a Converse sneaker
that costs 10 times as much as Converse sneakers?
Buy the Connies. I had Connies, you had Connies.
This, of course, isn't an actual conversation either.
We need the little red heart thingy on it.
None of this is going on at Keene and Casa Bramo.
None of it.
Of course. All right.
No.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Newly appointed UK Chancellor Jeremy Hunt has set out plans to try to bring order to the public finances and reassure markets after Liz Truss's economic programme triggered weeks of turmoil. He announced a further rollback on some of the tax cuts planned by Truss and a shortening of planned universal energy support.
No government can control markets, but every government can give certainty about the sustainability of public finances. And that is one of the many factors that influence how markets behave. And for that reason, although the Prime Minister and I are both committed to cutting corporation tax, on Friday she listened to concerns about the mini-budget and confirmed we will not proceed with the cut to corporation tax announced.
Meanwhile, Hunt will address Parliament with even more details later today. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
We've got terrible sentiment on Wall Street, not much better sentiment on Main Street, and we've got a Fed that's orchestrating a monetary policy that just seems clearly unsustainable. It just can't last long. It's going to break something.
That was Jim Paulson, the Chief Investment Strategist at the Luthold Group. Always great to catch up with Jim. I do stray, Tom, myself into the should-shouldn't conversation around the Fed, what they should do, what they shouldn't do. Ultimately, we have to talk about what they will do. And most people assume what they will do is hike again, Tom, in November by 75 basis points.
And again, now is when the lifting is difficult. I mean, it's all been easy. We've talked about this. I think we've been way out front on easy decisions. And now is where it matters, where you're out one meeting, two meetings, even in the first meeting of 2023.
Jamie Dimon said of JP Morgan last week to Juliana over at CNBC, the next 100 basis points, Tom, is the most painful one.
Yeah. And there's the then what, and I'm sorry, they're just data dependent. I'm not spending too much time on it versus the challenges of the Powell approach to the rest of the world. Yen, 148.84. What do we do with a 149 yen?
Problematic.
Yeah.
It's why intervention doesn't work, does it? I mean, come on, TK.
No, it doesn't
you come
work.
in for a little bit and you don't scare anyone off.
And even coordinated intervention, which is a rare occurrence, is a difficult. Not a rare occurrence is a discussion with Leland Miller of China Beige Book to illuminate on China. He is just outstanding, the co-founder and CEO of the hugely prestigious effort. Leland, I got to go to the immediate news. The great George Magnus over in London today says he's never seen anything, even in pestilence and conflict, like a postponing of China GDP. This is your wheelhouse. What was your response when they postponed Q3 GDP?
Well, look, I think the most obvious reason is that they are very busy on the party Congress. You know, you saw all those pictures of people in rapt attention at jails and statistic bureaus just sitting there very, very silently and without moving, watching Xi's speech. They probably just can't work because they're too busy listening. But you know, I don't think there's anything terribly nefarious behind it. You know, we see what the data are weak. They've been admitting the data are weak. You know, I think this is probably making sure that there's not just another bomb dropping off in the middle of a very choreographed event.
Forget about the choreographed event. What happens in the unchoreographed 2023 to the new dynastic Xi?
Well, look, it'll take a few months for Xi to formally get the three positions. And so the question then will be, you know, where does he pivot, if at all? Everyone wants to see a pivot on COVID zero. There's been no indication that pivot's coming. You know, you could see how they would do it, the rollout in 2023. But, you know, it's not just announcing COVID zero is over. It is saying, here's the policy. Here's how we're going to do the rollout. Here's how we're going to deal with the fallout. And it's not at all clear that this isn't a many month, maybe year long transition. So is Xi going to pivot on the economy? Probably not. Is he going to pivot on COVID zero? At some point, yes, but probably not soon.
Weren't there some small pivots, though, Leland, within this speech, basically around having a more business-friendly environment, both for national and international companies?
Yeah, look, I mean, it's hard at this point to see what's talk and what's not. I mean, if you remember how excited investors got all throughout 2022 when, you know, some party official, Li Keqiang, would come out and say, look, we're doing this differently, or we're easing this crackdown, or we're going to provide this stimulus. And nothing meaningful ever happened. So we'll have to wait and see. I think it would behoove Xi to have some sort of outreach, particularly with the U.S.-China tensions to the Europeans. I think you're going to see some of that going forward. But in terms of making China more appealing to investors, you have to have regulatory certainty. You have to have some sort of idea of growth. You have to end COVID zero. You know, there's a lot of obstacles. It's not just saying we're going to be friendly.
Yeah, the idea of growth is key here. Economists predict that Chinese growth will slow to 3.3%. So this year, a lot of people say that that's probably a highball estimate. I'm assuming that you probably think so, given that you've talked about a two-handle. The official target is 5.5%. The gap between those would be the biggest since they started setting GDP targets in the early 1990s. How much do you think that this is going to be a problem for this government, where they start to inject more stimulus and start to support the housing market, versus a reality of the new China in a new regime with a bigger middle class?
Yeah, I don't think it's a problem at all for them, because I think once they descended into lockdowns in the spring, the 5.5 handle was not only gone, but even the fake let's pretend that we got somewhere near 5 was gone. So look, they can blame this on COVID zero. Yeah, it's their fault, but there's a reason for not hitting these numbers. And the larger thing is that they've changed their priority set. So yes, they still talk about high levels of growth for some reason, although the narrative's changing, particularly in the last couple of weeks. But that's not what they're focused on. It's not what they're worried about. They're going to try to deliver enough growth so they don't have a political problem. But the reality is they're trying to do some structural changes that are very painful, and they're not going to be worried about hitting the high levels of growth anymore.
Leland, a 720 yuan gets you out not to 2005, but it just all of a sudden gets you out to a new weak renminbi strategy. What's the level of renminbi where that unravels? Do you have in your head a 7.XX level that this becomes difficult?
I don't, because it's a dollar story, not a yuan story. If this were sort of a renminbi exploding because of the weak Chinese economy, while the dollar stays pat against other currencies, you'd have a different dynamic. People would read into it differently. Right now, everything is weakening against the dollar. So the Chinese goal is to maintain relative stability, relative strength as much as possible against the rest of the world. But but making sure that things don't break on the way up. So they want stability. There isn't a number. It all depends on how strong the dollar gets over the next 6 to 12 months.
Leland, thank you, sir. Always important stuff with Leland Miller. He's great, isn't he? Leland Miller there at the China Beige Book International.
Yeah, when I first met him, he was looking at like utility costs, electric stuff, and completely refuting statistics. I think he would say the statistics today out of China are, on radio, I've got quotes around the word believable.
That works.
I think that works.
Well, can we just say it's better now, Lisa, than it was maybe back then?
Yeah, although they just entirely scrapped the ones that were due tomorrow. So
well, at least they're not
question.
pretending.
Exactly. So there's that in terms of how far. Exactly. So they're not pretending, but they're just not disclosing it because it might not be what they want to say.
Do you think on net, and I think this is an interesting thing to ponder, is COVID zero good for the global economy or bad for the global economy? I get it from the supply side of things, and we spent a lot of time talking about that over the last 2 years. But Tom, you've said it a million times about the demand side. Can you imagine if you had that full throttle demand out of China and what that would mean for this labour market?
It's just bad science.
And the inflation story.
I don't even take it over to economics, finance, investment, blah, blah, blah. I need somebody who's an adult like at Johns Hopkins or all the other great epidemiologists and virologists we've talked to. The fact of the matter is it's bad science.
But he doesn't care about that. We've got to do the blah, blah, blah. The fact of the matter is this is the policy, and we've got to work out what it means.
Will there be an end to the policy is the hope.
Sure.
I did not hear that from Leland Miller.
Although, to your point, John, if they scrap it, what does that do to gasoline prices? What does that do to diesel prices? What does that do to natural gas prices? This is really the question. At the same time, does it help some of the supply chains? That's a question I'm curious about.
I don't know. It's been so long since I've been... It's great to be back.
That's the cameraman.
Yeah, I know. The tang is still, but other than that,
Are you confused by the fact there is an individual holding a camera?
No, I'm not. I just,
How long have you been away?
Long enough for the tang to go bad.
Did you not have a cameraman down in DC?
Right here. I need fresh tang.
Keep up, TK. TV, radio.
Pictures.
You hear? Present. Good.
Under the circumstances, the Fed's going to continue to raise rates aggressively till they see the need to slow down.
I think the Fed is going to continue to be on this path for quite a few months.
I definitely think we'll see another 75 basis point move in November.
The more aggressive they get, the more you're going to bring recession fear as the primary fear over inflation.
Because of the Fed overdoing this, we're going to end up back where we were 10 years ago.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. On a Monday, just like all the recent Mondays, chaos out there on radio and television. All I can tell you is futures up 44, Dow futures up 303, and it doesn't matter, John. We're still looking at goofy stuff like foreign exchange and bonds.
Chaos in here or chaos elsewhere?
Both. Chaos everywhere. Padres won, leave me alone.
Was that chaotic?
It was really chaotic at the end. It is the second largest comeback or beating, I should say, of a ranked team like the Dodgers
did
since
Padres
1906.
Win, or did the Dodgers lose?
Dodgers lost.
Dodgers
no question.
lost.
Adore the Padres, but the fact is the Dodgers, like the Mets, were in a fog.
Do you want to squeeze Spurs in there too, or are you done on the
No,
sports
I think
side?
Spurs did okay.
Right.
What I want to move to
checking.
is United Kingdom here in 2.5 hours. What's the so what, John? About 10:30 this morning for Global Wall Street.
The Vigilantes won. Plain and simple. We haven't seen this, I think, since the Berlusconi government back in Italy in the Eurozone debt crisis, where the debt market, financial markets, foreign exchange have pushed back so severely it's forced the government to do a complete reversal U-turn on pretty much everything they announced.
I saw this, John, this weekend. I would not use it. It's inflammatory, but with AC Milan doing so well, I can come there.
Thanks, Tom.
Is the United Kingdom on the edge of becoming Italy?
I don't think so. It's got its own central bank doing its own thing, and I don't think it quite compares to what happened in the Eurozone debt crisis. I do think, Tom, in this situation, this government has been forced to do something it did not want to do. And I will even go further, because I don't think it's even controversial this morning, Tom, in the UK. The Chancellor's leading this country now, not the Prime Minister. These policies are his, and perhaps even Rishi Sunak's. They're certainly not the policies of the Prime Minister Liz Truss.
Lisa, let's bring it home. We just sum up all this international blather, including the wonderful discussions in Washington. Great. But for regular America, to me, they're being almost left behind by the elite conversation.
When you say regular America, you're talking middle and lower income
People that are looking at
individuals.
rents up, mortgage resets, they're looking at tuitions up, and food.
And right now, Bank of America CEO Brian Moynihan is talking in the earnings call and saying that the resilience is still there. That, yes, you're seeing consumers continue to spend, albeit a little bit at a slower pace in terms of the growth. However, this really is the dissonance. Where, right? And are there entire segments of a population that cannot continue to keep going with this? And what does that do to consumer expectations? John mentioned earlier, Tom, that report that we got out on Friday about the 1 year ahead inflation expectations as reported by the University of Michigan.
Gripping stuff.
I know. You dismiss it because it's 500 people that they call and you've never gotten called. But I do wonder if this is significant because it does signify.
Just set the scene.
Yes.
You get one of those phone calls from the University of Michigan. What is that, Ann Arbor? Is that right, Tom?
Yes.
You get the call out of Ann Arbor. Okay.
Well,
so they give you the call and they say
Lansing.
to you, where do you think inflation is going to be 1 year from now? Is that actually how that goes?
I don't know.
And they
I
say
have never received
5%.
it. I don't live in Michigan. I don't receive that. I don't know if it's just Michigan. But listen, they've actually been somewhat accurate in terms of reflecting the zeitgeist in America. Now, how much is this simply, and as you stop laughing at me, that this is just looking at the gasoline prices and then, getting
Can you see
influenced
Ferro
by
in
that.
the AC Milan shirt?
At home on the phone.
The flip-flops,
On the phone.
with a beer in his hand, with Liverpool on in the background, going, well, let me think about
I'll tell you
what
exactly where
inflation-
inflation's going to be 1 year from now.
Let me check the
The
Fed Funds
gasoline
futures.
aspect of this is clearly a factor.
Yes.
Gas prices have bounced
And
back,
diesel.
Tom. Look, we spoke to, who was it we spoke to around the jobs report? Randy Krosner.
Yeah.
And he said, no, John, they target PCE, core PCE. I said, give me a break. Chairman Powell's told me to look at ECI. That's why he did the pivot back in late last year. He told me to look at you, Mitch. That's why we're going to come in with a bigger rate hike than expected. And that's the problem with the Fed right now, Tom. We can sit here and say what they should and shouldn't do.
Yeah.
It's what they are doing, and they've told us they look at this stuff.
Rob Waldner going to join us here in a bit from Invesco on the challenges of
You know how I feel
institutional
about this.
bond investment. John, I want to dive into the data, and I'm going to lead with the Bloomberg Financial Conditions Index is at negative 1.50, which is the most restrictive except for February, March COVID. That's stunning.
And that's been the story and the objective to Bob Miller of BlackRock's point. Futures right now elevated. Bank of America doing okay in the pre-market as well, up by about 2.7%. The banks so far telling us kind of what we already knew, which is the economy's resilient, the consumer's doing okay. We're building up provisions because we think there might be a storm on its way. That seems to be the story of not just the earnings season, but the commentary of the last 2 months.
And the VIX 32.11 really doesn't move. We need that below 30 to give us any kind of good feeling. What else do we see, John?
Nothing. I haven't got the Dow on my board, Tom. Where's that?
The Dow's up 283 points, 29,993.
I see complete chaos. That's what you said.
Do we get Dow 30K hats? If
We do.
revisit?
No, not 30. 40K, you got 30.
Protest. You would storm
40K.
off.
Do you know how much
Can
you'd have to pay
imagine?
me to wear one of those things?
How much?
Like
What's the going rate?
serious money. $10,000 for charity, and I'd do the show in a Dow 30K hat.
Everyone take note.
10,000. If you can raise enough money for it, there you go, and we'll give it to a good cause. People who need
America
re-education
follows
about
the
using
Dow.
a Dow and perhaps allocating to the S&P 500.
Dow,
Okay.
John, it's like the autumnal leaves glowing from Labrador down. Lisa did the leaf peeping thing this weekend. It's the glow, John, of our heritage
Is
of
that
the
an
equity
actual
markets.
term, leaf peeping?
No, it is not.
Yeah, it is actually
no.
leaf peepers.
Leaf
yeah,
peepers.
retirees. They're on
leaf
buses.
peepers. Okay, you're
and
scaring,
they go
you're
up
scaring
and
the
they're
hell out of
leaf
me.
peepers.
Old people that peep leaves.
Yeah. I'm a leaf
That's
peeper.
not.
Please,
I don't think you
no.
want to admit that.
Can you
Please
see
don't.
me on a bus up at Bretton Woods at Mount Washington? Oh, they're
Peeping
so
leaves.
beautiful.
It was really crowded.
Yeah, they're called leaf
That's not a
peepers.
term.
Is that a moose?
That's not a term.
It sounds wrong.
Okay.
No.
Right now, we're going to try to salvage a show. We do this with Robert Waldner. Rob Waldner is Chief Fixed Income Strategist and Head of Macro Research at Invesco, and he joins us, I hope, this morning as well. Rob, you do big institutional money. It is a bond bear market. How do you extract yourself from the price declines you've enjoyed?
I think, Tom, the story is 100% right. It has been a bond bear market. But underlying that, if we think about it, we've seen such increases in yields. I mean, real yields have gone up in the last couple of months, 150 basis points or so, that we're really offering value. So the question, I think, should be reframed, which is for the first time, we have quite a bit of value in fixed income. And, that's where we think clients can start to generate, to lock in longer term returns And we think that's a compelling investment opportunity.
Rob, when do you think they're going to start delivering some price appreciation? I'm talking about Treasury specifically. The reason I asked that, Rob, is we had this conversation earlier. When do bonds start behaving like bonds? When yields start to fall because growth concerns are building so much? When do we get that?
Well, I think in terms of the bond market, we have to disaggregate the front end versus the longer end, right? And I think we see signs of some stability in the longer end. We think the curve will continue to invert. Wouldn't be surprised we get the high in yields this quarter in the longer end of the market, in, let's say, the 10-year sector. But with the Fed, committed to 75 basis points a quarter for a meeting for the next two meetings, it's probably the first quarter, second quarter next year where we get a peak in the 2-year. But we're seeing this inversion of the market, of the bond market, which will probably continue. I mean, it's a good point, though, John. I've been favoring sort of moving into investment grade in particular because of the widening spreads, and over the last several weeks or month, and we're still, we're at our wides in yield. So I do think it does make a very compelling opportunity now, even more than it has over the last month.
How do you deal, Rob, with investors with you, clients that want short-term investments or want the ability to withdraw their cash, and longer-term investments, when even investment-grade debt is not immune to the technical selling that will come into effect if there is some sort of international event that forces people to sell what they can, not what they want to?
So I think you're referencing back to the kind of event that we had in the UK, right? Where ultimately what happened in the UK is the rise in real yields really pressured investors who were the UK pension funds who had a lot of long-dated assets and then own these higher quality assets in this LDI strategy. They're forced to sell those higher quality assets, and I think there is the potential for that to continue, but I think in our view, we've seen a lot of the selling that's coming out of the UK pension funds. We may find some more places where we're going to force leverage to unwind, but we don't see a lot of leverage in the system this time relative to some of the past times, or at least it's not obvious where the leverage is.
Rob, have you ever heard of leaf peeping?
I have.
I've never heard of that. I've never heard of that.
So I'm from New England and have originally from Maine. And if you're from New England, you know about leaf peeping. The peak time of tourism in Maine is sort of September, October.
Leaf peeping.
Yeah.
Leaf peeking. Yeah.
Rob Walder of Invesco. I'm in shock. Look, guys, the amount of fact checking I've had to do on this program over the years, particularly with you.
With who?
So I've Googled it, and obviously it's got its own page. I've no idea if Tom's behind this page. Leaf peeping is an informal term in the United States and Canada for the activity in which people travel to view fall in areas where leaves change colours in autumn. Tom, there's different names in different places. In Japan, this custom is called momijigari. In Finland, the season is ruska. And a trek is called a ruska trekki.
Can you see Ferro? Lisa, can you see Ferro in those LL Bean boots up to your knees, the dark brown ones, in Millinocket, Clownton, Mount Katahdin?
Okay, so we have someone writing in saying that in Boston they're called leafers. Leafers, not leaf peepers.
People like Tom are called leafers.
Exactly, you're called a leafer. The amount of traffic, and it was kind of hilarious going up to see the leaves, was really intense, and people were kind of like, pushing each other out of the way.
You've done this?
Well,
Did you get up to 110th Street?
And people were kind of like, aggressively.
Done this.
I'm not doing the peeping. I did go upstate this weekend, and it was beautiful.
You should come over to the walk-up and check the leaf peep.
It was gorgeous.
The longest trek you and I have done is from one bar to the other.
That's true.
You think we're going to go and do a trek around Central Park?
Are people shocked by this factoid?
John and Rotris and Nomura coming out from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. As Germany grapples with an energy crisis threatening its future as an industrial leader, an acute shortage of workers is compounding problems for manufacturers. The lack of qualified labour brought on by an ageing population and by the pandemic is starving manufacturers from Airbus to BMW of the staff they need to keep pace with demand. Recent surveys found a record 50% of firms are cutting output due to staffing problems, and it's costing the economy as much as $85 billion per year. In Nigeria, at least 603 people have died in widespread flooding. The Humanitarian Affairs Ministry says nearly 270,000 acres of farmland are submerged in water. 82,000 homes are damaged and some 1.2 thousand people are now displaced. The flooding is expected to get worse over the coming weeks. Credit Suisse has agreed to pay $495 million to settle the largest remaining case related to its role in selling residential mortgage-backed securities in the U.S. that contributed to the 2008 financial crisis. Today, the Swiss bank said in a statement that it's, quote, fully provisioned for the payment, which will resolve claims tied to more than $10 billion in securities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
While my expectation is that rates are going to have to move higher for a sustained period, I do see risk around moving too abruptly to this new higher level. Moving too fast can disrupt financial markets and the economy in a way that ultimately could be self-defeating.
Esther George of the Kansas City Fed. Interesting comments, I have to say, Tom. Higher for longer, but ultimately question the speed at which you get there. Not too quickly seems to be the pushback.
Remember, we were at the Pioneer Grove for the Jackson Hole meeting. She was there with a puppy pivot.
I think she told us both off
and,
how we were behaving in the diner.
But that's an interesting theme from someone, regional agriculturally based. I mean, with a different view than financial New York or financial.
Hey, some of these states, Tom, they have unemployment rates so much lower than the national average.
Like 3%, 2%, whatever. What we're going to do here to get every time we can, with futures up 38, is talk to Jordan Rochester here in our studios, G10 FX strategist at Nomura. For Global Wall Street, frankly, this is the conversation of the day. Yen almost up to 149. Nomura doesn't have a relationship with the government, so I think you can talk freely. What is the nature of Japanese reserves? I've seen really smart articles, including from your shop, that a lot of the reserves are really immovable, and they've only got X number of interventions available if they choose to intervene. Comment on that.
Well, let's not downplay it. The size of the FX reserves is massive.
Right.
So $1.3 trillion.
But is it usable? Is it reachable?
It is usable. There's at least $100 billion in cash. So that's a significant amount for this market. And we saw the Bank of Japan, when they did intervene for the Ministry of Finance, it was large. And you saw a big drop in dollar yen. The question, Tom, is why haven't we seen them come back in with this move we've had towards, we're getting closer to 150. So we're long dollar yen right now, looking for 150. It's happening a lot faster than what I thought.
You're looking for weak yen,
That's
further
right.
weak yen.
And that's driven by a policy change or just intervention off the back of that 150 pause?
Well, I think positioning is a part of it. So when the Bank of Japan intervened, it wasn't a good trade to be long dollar yen anymore because, oh my God, I'm taking on the largest central bank in terms of FX reserves in the world. So I'm going to focus on the pound, I'm going to focus on Aussie, I'll do euro. So a lot of people just took their short yen positions off. And going into that inflation number on Friday, I said, look, this is a big number. Positioning is really stretched long dollars in euro, sterling. Where's the position the lightest? It's in the yen. So that move we're having now is people putting on fresh trades and not having much to take off.
So this is short-term tactical stuff. Can we get just out to next spring? Life after Kuroda, when he steps away from this central bank. How does policy change?
The risks are we have a more hawkish Bank of Japan. But I think that they're waiting for the Fed to do their pivot. I like the puppy pivot analogy there. Hopefully we get that pivot by February, March. And then the Bank of Japan will sort of be rescued in a way. They won't need to hike interest rates or change yield curve control or be aggressive on monetary policy because the underlying fundamentals of Japan, core CPI in Japan is nearly 9 times slower than America. So there is no need to be looking the same as the Fed. But in April, we get the sort of wage negotiation data, and if it's strong, if we have second round effects from Japan, then maybe we do get more hawkish Bank of Japan going forward.
Meanwhile, over in the United Kingdom, I do want to get your thoughts on what's going on over there, because you had a 5 of 5 conviction that we're going to get to, 95 on the cross by the end of the year. Have you rethought that based on some of the recent fiscal moves?
The fiscal moves are causing huge volatility, but the one lesson I learned, Lisa, from trading Brexit over the years, we were called Mr. Brexit at Nomura back in 2016, is don't trade sterling based on politics. It's too fast. You can't get an edge. And that's what's happened. If you were short sterling, long sterling, the moves have been extremely volatile. The reason we're 5 out of 5 in conviction on that short sterling view is based on the macro fundamentals. Because if you trade the politics, it's like having a chocolate teapot. It looks nice, sounds good, but it's really poor in practicality terms. Politics and trading FX only last 1 day, 2 days. For me, slowing growth in the UK, the Bank of England hiking into a recession, that makes the UK asset base look very unattractive to investors. I think this recession risk is going to get worse over winter. We'll have possible blackouts in the UK. So right now, this morning, there's a bit of euphoria because Jeremy Hunt has tightened monetary policy, fiscal policy in a dramatic way. I didn't expect the energy price cap to be changed, but it has been changed. It will end in April, the universal package. So gilts can rally because of this sort of euphoria, but I do think it's short term, and we'll still be in the same situation where Europe and UK look pretty unattractive as recession risks get bigger.
So both the Japanese story as well as the British story have one thing in common, which is they're on the other side very much of the dollar story, that the dollar continues to represent the dynamism of a U.S. economy that stands out as probably the strongest in the developed world. When does that change? When does the rest of the world start to really impede on what we're seeing in the U.S.?
I think it's in February and March. That's the sort of timing I have for dollar weakness to come back in. Reasons for that will hopefully be through the worst of winter. The projections for the gas storage in Europe hopefully says we've made it. Don't worry, we're not going to have severe blackouts. And then by that point, the Fed should be approaching their terminal rate, 525, 550 is kind of where we have it at Nomura. And then from that point, the market will say, right, they've got to 550. The only way is down from here. Even though there's possible they could go higher, we can't always rule that out. But I think from that moment, the sort of US higher rates driving the dollar, the terms of trade story hopefully all turns in February, March.
Have you done momijigari in Japan?
Yes, a little bit. Yeah.
Japanese leaf peeping.
Did you have to look that up again?
No, I speak Japanese.
Oh.
Go on, Jordan.
So we have a conference in Kyoto. It's a central bank's conference around March time. It's absolutely beautiful. All the flowers, all the leaves on the trees are white and pink, and it's one of the most beautiful things in the world.
Don't you believe me?
No,
you know what's great?
I'm very cultured.
Okay, that's great. No, I'm not saying you don't speak Japanese.
Do you know what's great about this?
But then you're
Nomura flies in Devo.
Jordan Rochester. Jordan, thank you. It's good to see you.
I think that's wonderful.
Going to get some news out in Credit Suisse. If you'll take me seriously
quite
for a moment.
News. Yeah,
okay.
Quite the news.
The investment bank chief is set to leave the company in the coming weeks amid a broad overhaul of the group that will likely see the unit cease to exist in its current form. The latest reporting from our team over in Switzerland. So he's expected, this announcement and this departure is expected to be made on October 27th. Those of you familiar with that date will know that's also when from Credit Suisse we get the bank's new strategic review. This all according to people familiar with the matter. As you know, Tom, Lisa, Credit Suisse has been a mess for a long, long time now. We've had leadership change after leadership change after leadership change, and the date in everyone's diary is 10 days away. Lisa, it is October 27th.
So how much are they basically going to have to announce piece by piece of the strategic review before it comes out in order to appease markets that are eager to hear what's next? I mean, how much can trickle out before they have to release it early at a time when you already have seen incredible credibility lost as people speculate about what gets sold and what doesn't?
Back 20 years. This guy's been through Morgan Stanley, Deutsche Bank, Goldman Sachs International for 10 years, then Lehman, then Nomura, then Bank of America, and I think that's where he finally lands at Credit Suisse. I mean, the whole IB model, witness Goldman Sachs today, and Shree's going to be on with us here, Global Wall Street, in a bit. I mean, it's almost like IB is under threat right now over what do we do next.
Well, for this particular banker, Tom, according to our reporting, he's been focusing on the overhaul of the investment bank, is now looking at options including starting his own advisory firm or joining another institution next year.
Okay.
We'll see where he lands next. But that's the latest. So there you go. Much more from Credit Suisse still to come. Jordan, this was special.
It was.
Thank you, buddy. Thanks for being with us. Jordan knows how to speak Japanese. Omijigari.
I'll meet you.
No, I don't even think it's that. Anyway.
He's just making it up. You don't speak
No, it's Mamijigari.
Okay, but do you actually speak Japanese?
Sure. I haven't got enough time to practice it.
That's
Credit
really
Suisse,
cool.
where are we? There we go, up a little bit alongside futures from New York City. This is Bloomberg. Live from New York City this morning. Good morning to you. Equities doing okay on the S&P 500, pushing higher through most of this morning. Last week, a week of losses, driven by Friday's move lower. This morning, Monday morning, up 1.2% on the S&P 500. Yields last week down on a 10-year a little bit, and then back up aggressively, then down all over the place in the bond market. On the week, though, a 10-year yield higher for an 11th consecutive week. What a move that's been in this bond market, Bramo. It has been relentless.
Yeah.
Higher on 2s and 10s. I think for a 2-year for 6 weeks, on a 10-year for 11.
And we've had a real shift in the psychology of a lot of investors and Fed members, especially with the CPI report yet again coming out hotter than expected. People are surprised by what they've gotten wrong again and again.
Manufacturing, Empire Manufacturing, in at minus 9.1. The survey, negative 4.3. The previous read, negative 1.5. You make much of that? Big deal?
Honestly,
as you were.
Michael McKee actually did not come on. He would have otherwise come on if he thought that it was a big deal.
He
so
was
I'm going to go with him.
come on and didn't because
exactly, because it wasn't that notable. But it is slightly deteriorating. I'm not going to say more about that.
Tom's not even looked at it.
Yeah, I haven't looked at it.
I know, I'm aware.
I'm watching dollar yen, 148.79. When will they intervene? Jordan Rochester just brilliant on that with Nomura moments ago. We're going to pause in usually a slot that we have at 8:31 Wall Street time on economics and look at the reality of asset management. We do this with Oliver Beta. He's the chief executive officer of Allianz. He's been on a tour of duty for a good number of years to see their success. All John and I want to know is you have the football sponsorship of the soccer team, the football team from Munich as well. We see the sponsorship of sports. What's the value to Allianz, the payoff of Bayern Munich?
Oh, it's hugely positive because that's the best brand in sports, at least in our country. And we've been associated with it for many, many years. I'm very, very proud of it.
Now you have a bond bear market. Some would say your best brand in acquisition was the Gross-Alarian Combine of Pacific Investment Management Company years ago. Give us an update on bond asset management and the view forward, given this great bond bear market.
Well, the current circumstances are tough, but it's very good to be with the best company in these environments, right? So we see a flight to quality over time. People are watching. But because we have a very, very long duration business model, we look forward. We believe it's going to be fantastic for PIMCO and us over the next few years as the interest rates stabilize. Because the money will come back into bonds. And think about accumulation at the interest rates that we have. People often don't run a simple NPV model and say, what does it mean if you reinvest at 5% or 4.75 rather than 0?
You buried an important line there. It was in there, but it was buried. When interest rates stabilize.
Yeah.
They're not stable. What did you make of what happened in the gilt market in the last couple of weeks? What are the lessons you've learned from that?
The first one is if you have a political idea that it's not anchored in economics, it's very dangerous, particularly if you're not the world reserve currency like the US dollar. We have learned that, number one, Brexit now will start to pay the price, and you see that. And the second thing is that markets have become to dominate again. We're coming out of 15 years of quantitative easing, no price for risk, nothing, no fiscal discipline, no monetary discipline, and suddenly that's back, and people have to get used to the fact that the laws of physics hold again, even for governments.
Well, and we were talking about how this gives room and gives rise, once again, to bond vigilantes.
Yes.
Are you the bond vigilantes? Do you actually actively go through some of the policies and say, not going to buy this company, not going to buy this nation because of what they're doing?
I wouldn't be thinking about negative selection because that's not what we should talk about, but we're looking at countries and companies that properly manage. You know, if you have a dual deficit, think about that. 3 years ago, we had 3 times the financial stimulus in the United Kingdom that we saw a few days ago. Nothing happened in the markets. Right? Nothing happened. Everybody was sleeping. And then suddenly people wake up to the fact that what has been done is really a disaster, and suddenly the prices are coming. Why is that? Because of inflation, people have started to reprice assets fundamentally, not just bonds. And by the way, we are not even at the midpoint of repricing of assets. We've just seen the liquid assets reprice. The rest will come now.
When you said actively selecting specific companies, specific nations, this speaks to the active selection that so many different fund managers talk about now as really reigning supreme. Where does that leave passive management?
It's really interesting. So it is different between equity markets. If you have large cap equity, you can invest in them very effectively through index. If you're in the bond market and you don't know where things are going, you better be with the people that know what is happening and can differentiate. It's a great proof point. So I hope that all our colleagues are proving themselves now.
I'd like to repeat something you said moments ago. The liquid markets have repriced, the illiquid markets haven't yet.
Yeah.
What's that going to look like? We've spent a long time talking about pulling back the veil on some of the carnage that might take place because of 10 years worth of zero interest rates. And what we get told is that in public markets, in credit, balance sheets are strong, the resilience is there, the maturity walls is way out on the horizon, not coming soon. What's going to happen in private markets?
I'm not a great investor, so let's just start.
I'm
trying to be a good risk manager, which is very hard. But it's very hard to see it, and therefore it doesn't mean it doesn't exist. So people have to face a lot of scrutiny now on how the funding is. So watch out more, not just leverage, but liquidity. I think, and we saw that in the gilt market, people do underestimate liquidity traps. And that's something that we need to look for. And you see that in private equity when people look where are earnings really coming from? Are they trading amongst each other? Are there true exits? What are the funding structures? So it's going to go through real estate, private equity, just slow motion, but it's going to come.
The gravity's back. The risk-free rate is back as well. Talk about conservative money, pension money. Forget about LDI and the gyrations in London. Just normal institutional money. What's the shock going to be as the risk-free rate returns?
So the key thing is really, and that's what we also have to do, think about resilience. Right? The point is the shocks will be harder than people anticipate. The diversification is the thing that is never there when you need it the most. So people really need to look at their models and saying, how come the world completely missed out on inflation? I mean, when you think about the fact that in November of last year, we've started to buy inflation-linked bonds a lot of people were still saying, yeah, but in the middle of this was all central banks, even some of our biggest economies. So the question is, why is that happening? And the first answer is, I don't know why, but what I know is we have to de-risk at
So how do you de-risk? You just bring in duration? Do you have to change your actuarial assumptions?
Exactly.
How do you de-risk with adult money?
Yeah, the adult money is basically, yes, if we were, completely in an endowment, you would really selectively take risk. In this environment, we can't, with a AA rating and one of the few places in the world that AA rate, even give the impression that we don't have our tail risk under control.
Given that you're based in Europe right now, how concerned are you about the prospect that the pain that you're experiencing now, both from a business and an investment perspective, is not just going to be this winter, it's also going to be next winter. It's also going to be potentially for years to come if there is not some sort of sustainable energy plan put into effect?
So I have to be a realist, but I'm also a born optimist. Otherwise, I think I couldn't do the job, right? So the first thing is, I think, particularly the key thing is that people, I think, have been overselling Germany, if I may say so. So I'll give you an example. We have had demand contraction on gas, 15% already this year. Now, much, for example, Italy has been only 2%. So we will have most likely enough gas to come through the winter. People do not factor that in. Now, the second question is, what will be the implication for industry to reprice its products and its production supply chains to a higher energy price? And that's happening. I really believe in our engineering capabilities, very comparable to Western Switzerland, where everybody said when, the Swiss franc was floated that all the manufacturing companies would die. No, we invest in innovation, will be very good. Right. The key thing is, however, we need for Europe to realize now one important thing. Germany needs to really focus on reinventing its business model. It's over with cheap energy from Russia, successful exports to China, and America providing all the security. I mean, that formula is ending. And that will require a lot of energy on the German people to fix its model, which means we have less attention and tolerance for doling out money to other people.
This has been really, really informative, sir. Just wonderful to have you in with us, but this isn't why we had you in. You people finance Bayern Munich, the soccer team in Munich. Are you guys going to steal Harry Kane from Tottenham? I mean, that's the only reason we had you. Are you going to bankroll this football team in Munich to steal the jewel of the United Kingdom?
Even if I knew the answer, I wouldn't be able to tell you.
I mean, this is in the zeitgeist right now.
That's the only reason we had the
I called up Qantas and I said, get the guy from Allianz in. I said, get him in because these are the people that are going to steal Harry Kane.
Are we going to do the show from Bayern Munich?
I think October. It says
Fantastic
like a year from
fans.
now.
I have to say, I do like the Dortmund fans too, though. They're pretty impressive.
And every fourth German is our client, so we have a lot of Dortmund fans.
So you like the Dortmund
we have
fans?
A lot of fans of.
It's going to be very diplomatic.
And then Juventus, the
From
Allianz Arena.
Cologne and Juventus.
How many stadiums do you have?
Quite a few. 12.
Can't count them.
12 across Europe or worldwide?
No, worldwide. For example, in Sao Paulo, the stadium's also branded Allianz. It's been a great investment.
Have you been there?
Amazing.
Yeah, it's really, and people pay a lot of attention. And football does something that politics can't do. This as we unite people. We bring people together. We make them enjoy their lives, regardless. By the way, most often on both sides, whether winners and losers. And therefore, it's great. It's bipartisan.
Do you realize if Harry Kane goes from Tottenham to Munich, it's un-American? I mean, that's un-American.
I've been trying to tell Tom, greatest sport in the world. Just the greatest sport in the world. Nothing close to it. It just is truly the most brilliant sport.
So why don't you come over? Regardless whether it's Juventus or Bayern, would be delighted to host you.
Well, thank you. We'll take that under advisement. Can you two have a discussion on the World Cup? First discussion on the World Cup on Bloomberg surveillance. It's like
you want to throw that in there?
Yeah.
Germany and Qatar. What are you looking for, sir? Do you think you can make it happen? Win a World Cup? Another one?
I don't know. It's a lot about passion, but it's also about the right moment. And to have the energy when it really matters. I'm certainly crossing my fingers, but the most important thing is to have a great, great, great tournament.
Can you tell FIFA we never want to do this Winter World Cup ever again? I think it's a travesty. I really do.
Lisa, what do you think?
We're taking a month off in the middle of the season to do
a
World
that's
Cup.
idiotic. That's like hockey.
It's ridiculous.
That's
We're doing air conditioning in the football stadiums.
Yeah, interesting choice, but it is
there.
And so I think we're always great at criticizing things. I think we should be looking
fantastic
forward
at criticizing
to
things, sir. Yeah. That's what this show's about.
Well, thank you for coming.
Oliver, it's good to see you.
Breath of fresh air.
The
Thank
Allianz
you.
CEO from New York City this morning. Good morning. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Here in the UK, the newly appointed Chancellor Jeremy Hunt has set out plans to try to bring order to the public finances and reassure markets after Liz Truss's economic programme triggered weeks of turmoil. He announced a further rollback of some of the tax cuts planned by the Prime Minister and a shortening of planned universal energy support.
No government can control markets, but every government can give certainty about the sustainability of public finances. And that is one of the many factors that influence how markets behave. And for that reason, although the Prime Minister and I are both committed to cutting corporation tax, on Friday she listened to concerns about the mini-budget and confirmed we will not proceed with the cut to corporation tax announced.
Meanwhile, Hunt will address Parliament with more details later today. Ukraine's government says Russia launched kamikaze drones this morning. The explosions hit the centre of Kyiv, damaging several homes. It is the second strike on the capital in a week. In Luxembourg, European Union foreign ministers are due to agree on the launch of a new mission to train around 15,000 Ukrainian personnel and sign off an additional $487 million in weapons financing. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
I definitely think we'll see another 75 basis point move in November. And, I had thought they would slow down to 50 in December, and I'm going to, cling to that for the moment. But certainly, if the inflation numbers over the next couple of months come in the way that the last two have, then it's not clear to me that they can step down from these 75 basis point hikes.
Stephen Stanley on the economics of last week and the week forward here to that important November and then on to December meetings as well into January on the Fed. It is a movable feast. Lisa Abramowicz and Tom Keene. Ferro prepares for the 9 o'clock hour. 51 points on futures. Dow futures advanced bigger, up 340, over 30,000. The VIX under 32, 31. 0.85. It is a story that has been anticipated, written by Sri Natarajan of Bloomberg News today, and it shows not a fractured Goldman Sachs that overstates it, but a Goldman Sachs looking to the end of the year in 2023 is one big challenge. Sri, thank you so much for joining us here on the Travails of David Solomon. I'm going to cut to the chase. William Cohan's book on Goldman Sachs, Chapter 2 is called The Family Business, and Goldman Sachs has always been that emotion from the 19th century as well. Solomon is completely removed from the fabric of that chapter in Cohan's book. How threatened is he now by those that yearn for a Goldman Sachs that was a family business?
He would certainly tell you, David Solomon, that it is not a family business. They don't want to run Goldman Sachs like this partnership that it used to be. They see this as a Fortune 100 company, one that has a corporate setup, one where is one prime CEO and everyone who falls under him. Now, 4 years in, what is the mark-to-market on David Solomon? This is the third major reorganization of his business lines that he's undertaking in just 4 years in the top seat. In fact, with this one, he's undoing some of the signature moves from his last major restructuring in 2020. That, to us, definitely feels like a move that is being taken under pressure and in response to some of the criticism that senior management has faced inside and outside the firm.
What is the pressure versus a partnership board structure versus a publicly traded board structure? Is there heat from the board or selected members, or is it from the managing partners, whatever the modern phrase is of partnership?
Ultimately, you're responsible to the shareholders. If the Goldman Sachs stock had been outperforming everyone else in the financial services universe, there would be no pressure. Doesn't matter if there's griping, doesn't matter if there's complaining and grumbling inside the firm. But that's not been the case. In the last 4 years, the firm has not been able to re-rate the stock. It has not been able to get that jump over Morgan Stanley. It has not been able to get that jump relative to JP Morgan. When that happens, when there are so many changes, and a CEO who's trying to change the very fabric of Goldman Sachs from what it used to be 20 years ago to what he hopes it will be down the road, it will create a certain level of discontent, and that will bubble up to the surface like we're seeing.
How much has David Solomon lost the faith, not only in investors, not only in the board, but also of people within the rank and file of Goldman Sachs?
It would be very hard to say that he has enjoyed the full and total support of his executive team. Having said that, he would argue that 4 years is not enough time. He still has a few years in him. He still has enough time to make the pivot and tell a story to shareholders and investors and analysts that actually presents Goldman Sachs as a company for the future. But when he has to make strategy reversals and about turns, it just becomes harder to land that narrative and make sure that it sticks.
What was the story with the consumer unit, considering that they've lost money consistently and now seem to be reversing?
And that's important because one of the big changes that they're planning with this reorganization effectively involves dismembering the consumer unit as it used to be. A lot of the direct-to-consumer push that was operated under this Marcus brand name is getting shoved into this larger asset and wealth management group. The partnerships that they had with Apple and General Motors, the Green Sky fintech company that they bought last year, transaction banking will exist as a standalone business, much smaller than what it used to be, and will show losses at least for the foreseeable future.
How does someone like Apple respond to that?
Apple doesn't mind as long as they have the leverage in the relationship, which they clearly have. They do not care about the internal dynamics at Goldman Sachs. But Mike Mayo at Wells Fargo gives us the best analogy. To him, what they're doing with consumer is effectively equivalent to the demotion of Pluto as a planet.
That's so Mike Mayo. If you know Mike Mayo, that's so Mike Mayo.
Right.
Does that put Utah on Pluto? What happens to Utah Goldman Sachs after this reorg?
It stays. They are still committed to a lot of the tech stacks that they're building, and that is part of the reason why they have such a big presence in Utah. It's not so much for the call centers in Utah and Texas, but for the tech platforms that they're building.
Why now? I mean, Goldman Sachs reports earnings tomorrow. We're going to parse through them. Is this a sign that there are going to be some huge negative surprises having to do with the consumer banking unit? Is this because they are failing to deliver on the fundamental level, or is this just simply a coincidence that comes especially ahead of a new economic cycle?
Well, three things. Hopefully no surprises with respect to the consumer business, because we've been telling our readers and listeners and watchers that it is going to face a big loss-making year. At mid-year, Goldman projected that the consumer business was on track to lose more than $1.2 billion. This reorganization will change some of those numbers. But equally important, because consumer was not working the way they hoped to, they are taking it to a narrower lane and hoping that they stick it to a business that plays to its strengths. Equally important, in the last 4 years, David Solomon and John Waldron, his deputy, they had not necessarily been playing up the strength of trading and banking at Goldman Sachs, which, let's be honest, is Goldman's core business and something that they're really, really good at.
To the chase. How many days is he left? How many weeks is he left? How many quarters is he left?
I suspect the Goldman Sachs board and even his management team will cut him some slack and will have more patience for him than Tom Keene.
Okay, we got to go. Well, I'm not saying me, but I'm saying that's all I'm just speaking for the audience on radio and TV. They want to know about this soap opera that is Sri, thank you, Days of Our Lives with Sri Natarajan at Goldman Sachs. Lisa, I'm looking at the intraday on yen. Guess what, folks? Jordan Rochester did it. We've moved in stronger Japanese yen, 148.88. down to 148.62. These are teensweens moves, but they're germane here as you wonder about the intervention watch.
Yeah, the bigger question, how much intervention can they actually do? What stomach do they have for it? What reserves are they willing to use to simply stave off the declines that they see in terms of versus the U.S. dollar? The bigger question, though, is just a sea change, really driven by the strength of the U.S. dollar. And you really were good on this when you came in. Yeah. And you said the IMF is very concerned about this. What about swap lines? What about the shortage of dollars? What about the liquidity concerns globally? When does this become a problem that really impedes back on the U.S.? Not yet, and that's the reason why you're seeing the strength in it.
I'm not going to go to the numbers now, but the restriction on BFCI, the Bloomberg Financial Conditions Index, is tangible. Equity markets lift here. I don't know if it's because of yen or whatever, but futures up 51, Dow futures up 337.
I'm not going to pretend to give any narrative to this because some of the rallies recently have been pretty shocking. I think going back to what Mike Wilson said of Morgan Stanley when he was talking about the likelihood or the possibility of a 16% rally in the next couple of weeks and months, heading into earnings and after, and then boom, back down to 3,200 for the S&P. Just gives you a sense of how volatile people are expecting this to be.
One question I had, I never was able to get you on this, Lisa, today. It's been so busy. There's been shifts in yield. What's the spread market done?
The spread market has widened, but not as much as you would think. You are starting to see a bit
We're starting
of weakness.
To see high yield distress.
Yeah, well, I mean, significant, but in certain pockets, but not as much as some people think that there will be.
A really interesting Monday we're going to have. Stay with John Ferro for the idea of the Dow up 343 points, 30,000 level again on the Dow. It's good to be back. This is Bloomberg. Good morning.